Let's get this show on the road, ladies and gentlemen. Welcome to another get together on a Sunday. Sunday. Hope you guys are all doing really, really well in these chaotic times. As always, while we wait, we're just going to listen to a song that tells the message of the day. And the message of the day for me is, it's always interesting that we want to gain it all, but actually, that quote from Jim Carrey rings true, where he says, I wish everybody could understand the meaning of life by getting everything they want and then losing it. Then it would really make sense. And a lot of times, we've all gone through the getting and the losing, and I think without going through that journey, it doesn't make sense when you get it, or it doesn't last. So, many of us have now, specifically in crypto, gone through the journey of taking some losses. And like any good fight, you get punched in the face a couple times, but a bloody nose does make one hell of a story. So we're going to listen to a song just related to that while we wait for a few more people to filter in. Please enjoy Spiritual Manner by SNX.
From what I was born into, but I need to look into myself to find what's true. It's always been me, it's always been you. No matter what you say, there's nothing I can do. You just need to trust me, and I'll help you be the best version of yourself. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. Get rid of the facade and the overthinking. Stop all of your worrying and trust me, I'll make you see what I want you to be. The best version of yourself. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. When the moment comes, don't run from it, don't hide from it, it's meant to be. When the moment comes, don't run from it, don't hide from it, it's meant to be. When the moment comes, don't run from it, don't hide from it, it's meant to be. When the moment comes, don't run from it, don't hide from it, it's meant to be. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first.
I love that song. I also love SNX specifically because he doesn't copyright me every time I play his songs in the videos, so I can put it up on YouTube, and also just has such spiritual music. But it's like the truth of life, that life begets death, happiness begets sadness, loss begets gain, and vice versa, right? And it's the balance between the two that actually makes this whole thing even worth having. And today we're going to go through an analysis of how in the world we are losing what we know to be the world in the way that we've all grown up in, to be able to gain what we know to be the potential right way to live and gain a bunch of other stuff, right? So this old world needs to lose itself and go through the forest fire for it to truly be reset in a way so that it gets to the other side and we actually have the ability to grow a new forest that is more abundant and not about lack, that is more about oneness and cohesion and not about this individualistic me, take world, right? Now, that shift is scary. It's something that is confusing. If you've noticed, the world doesn't make sense anymore. If you haven't noticed, God bless your heart. Like, I envy you if you haven't noticed. If you're living a world where you just enjoy your life and you're not tuned into all the BS, you should just tune out of this talk now. You're perfect. You're nailing it. For the rest of us that are watching this thing happen and confused by it, you know, to understand the shift and understand how to build a plan and a strategy to thrive through this process is what we're going to cover today. So we're going to understand the shift. What does history say? You know, how do we navigate it? What's the confiscation of wealth that's coming? Where does crypto fit into the structures? How do we map it out visually into a wealth map and then build a strategy that helps us not just survive this thing, but literally thrive through it with historical proof of how that's been done? How to invest, you know, picking coins, profit taking, tax optimization, jurisdictional arbitrage. Then looking at, okay, you know, we made the money in crypto. This is something that has been my experience, that everybody focuses so much on making money in crypto that when it's made, it's like, what do we do with it now? So we're going to look at all that, the psychology of how to navigate this process properly, and then do a market analysis as to what's going on. So all of that, hopefully we can complete in 2 hours. If not, you know, we just hang out. It's a Sunday. Hope you have your coconut water, coffee, whatever you like. No more smoking cigarettes, as like we were talking before, because them's are bad and you die from cancer. Did you know that?
Are you recording, Sim?
Yes, I am recording. This is now going to be recorded on YouTube. From the next one, it's going to be hopefully, it's going to be broadcast. It's going to be streamed live, but this one's recorded and I'll upload it afterwards. Absolutely. Thank you for the check, though. That's really important. Okay, so this shift that's happening right now, why doesn't it make sense? It's because we just haven't been in this part of history for a very long time, right? Like, we looked at this path, that this is and I also realize I can draw stuff here and it shows up properly in the recording. So this is the bigger path of history, the 250-year cycle of history. These are the 84-year cycles of history. And if you haven't seen the previous talks, please go back and watch it. I dive deeper into this. But like I said last time, we're used to existing in these kind of relatively straight parts of history. You know, most of us have been born and raised in this kind of curve of history where things were relatively straight. We haven't gone through a pivot point. These kind of financial cycles. I mean, I was born in 1989, so this is like my first pivot point in a financial cycle. Many of you guys have witnessed the shifts that was there before the 1990s, but this bigger pivot point we haven't gone through. And in this pivot point is where all of this stuff stops making sense, right? Now, what happens in this pivot point is the financial system changes and the societal system changes every time. And it changes in such a fundamental way that it's unimaginable to the people before. That if you went back to, you know, in 1920s, when the markets were roaring, and the roaring 20s, and everybody was wealthy and free and happy and dancing, if you told them the world is going to be blown up and a completely new financial system is going to come about and there's going to be the Great Depression and everybody's going to get up and start murdering each other, they would have just laughed you out of the door. Same thing back here. Same thing before that. Like, when we are close to this pivot point, prosperity is so high and people have never witnessed what's about to happen. So it just never makes sense until it's at people's doorsteps. The crazy kooks amongst us, which I see a lot of us here in this room, thank you for joining the kook circle, have been yelling about this corner the whole time. We're like, hey, the pivot point's coming. The GPS says the pivot point's coming. Everybody was like, you're crazy. And we're like, yes, we are crazy, but that's beyond the point. I'm telling you the truth, right? So That change of the financial system is specifically where crypto fits in. But more than just crypto this time, the societal base layer is changing. Consciousness and intelligence is changing for the first time. That we've invented a technology that is already smarter than all humans. They just haven't given it to us. That is capable of existing outside of time and embodying all of the wisdom that we have collected all at the same time. Humans are like a librarian that walks through a library and pulls one book at a time and reads one page, reads one line at a time. AI is like a consciousness that's able to witness the entire library at the same time and does not witness time. It exists beyond time. That's just one piece. We have created productive units that are robots, so we won't need people anymore. And it sounds like a terrible idea until you ask everybody, do you like your job? 90% of people don't like their job. Actually, it's actually about 80% of people hate their job or don't like their job. 20% of people don't mind their job. They're pretty okay with it. It's a single-digit percentage of people that just love what they do so much that if you didn't pay them, they would continue to do it. So now if we bring in these productive units that are going to do labor and leave humans free to do whatever they'd like to do, potentially a lot of those humans are going to build another arc over here into the future, which is going to be built around purpose, connection, oneness, love, healing, depth, whatever are those things that drive us that are beyond the money. That's an arc that we're going to build. Then some people are going to go down another path, which is going to be lost, metaverse, gaming, porn, whatever, bunch of other shit on the other side. That's not our game. Okay, let those people deal with that. But the financial system and the societal system are changing. How work happens is changing. Work in and of itself is a productivity calculation. You take resources, labor, and energy, and you combine them together into productivity, which is work. Labor becomes marginally free through robots. And marginally free just means you pay for the robots, and then after that, it's basically free. Energy is becoming relatively cheap, and it's going to become free within the next 40 to 50 years. There's many, many novel physics methodologies that are going to come out from this AI that are going to be like, oh my God, we found 0-point energy, as if these kooks weren't already saying that existed and we didn't already kill everybody who created it before. YouTube, relax. It's going to be fine. Right? Energy becomes free. Labor becomes free. Resources, which are limited today, are going to be pulled from space. There's infinite resources in space. They're going to be pulled from space. That's going to basically, resources become free within the next 30 to 40 years. That means productivity becomes infinite. That means the amount of work that can be done and the amount of value that can be delivered to humans and robots and on Earth becomes infinite. That's why we're switching to a world where money as a concept disappears, because earning wealth to buy limited resources becomes completely illogical when the resources become infinite. The sharing of those resources and the rationing of those resources to the most valuable actors is what the technocratic neofeudalistic system that we're walking into. It's all to say shit doesn't make sense. It's getting crazy. Work, I don't know. Money, I don't know. Same way back here, around this pivot, before this pivot, for a long time, farms were the most valuable thing. Food was the most valuable thing. Right around here, people started to come around and start to put up buildings that had factories inside, and those buildings became more valuable than the farms. Then right around this pivot, electricity came along and light. We could light places. Like, you know how crazy it is to tell somebody before I'll be able to just like touch something on the wall and the whole house will be bright? Like, that's just utter magic before that. And it happened after this. That we'll be able to communicate across oceans instantaneously was magic, and it happened here. Now we've had internet and AI and all these things. So new magic is happening, right? A key thing that happens during this pivot point is wealth confiscation. It's never failed to happen all throughout history, and history doesn't repeat, but it writes raps better than Tupac and Biggie combined. So wealth confiscation is the name of the game here, because the game is confiscate the wealth here through war, through it used to be through war. Now we're in a 5th generation war, and we're, you guys are watching it happen live. Then it's redistribute that wealth from the people who confiscated it into the hands of, the productive ones to create prosperity. Then prosperity peaks around the middle part. Then the wealth goes from the prosperous hands back into the hands of the people who know how to take it back, so-called elites, or the people who just know how to play the game. And then right around here, it gets maximally concentrated again into the hands of the people who had it back here. Same things happen now. Wealth inequality is peaking. For a while in like the 70s, 80s, 60s, we had a consciousness, sex, drugs, and love revolution. 70s, we had like, some fun times. 80s, I heard, were pretty chill. They're pretty nice. World was pretty good. Prosperity was good. Families could survive from one person working. 90s, shit started to go down. 2000s, oh my God. 2020s, what the fuck is going on? Yes, I sound like Trump as I'm getting closer to this, right? So it's just the waves of stuff happening over time. So this new way of structuring society is one where individuals extracting maximal value from society is disappearing. That I like. The destruction of nature is not being monetized. The protection of nature is being monetized. I like that too. Humans are being, according to their words, evolved, as if we haven't been evolving the whole fucking time, evolved into sharing creatures rather than stealing creatures. I'm partial on that one. Sharing sounds nice, but the evolve part, I don't like to evolve without, I like being an ape. I don't like a 2.0 version of me for no reason without my consent. I like the 1.0. He's pretty retarded, nothing wrong with him, except for all the things that are wrong with him. And so as we're going into this new society, we are being forced to either coalesce or divide. And we're picking the sides now. This is the coalesce group, right? Where crypto fits into that is it is the organization mechanism of all of this new infrastructure, of all of this new society, right? In this new part, all of this was built on the dollar. This one back here was built on the pound. With the next bridge is going to be built on blockchain. So let's look at it from this perspective, right? So let's say this institutional cycle is built around the institutions of, it's a little hard to see. Let's see what we can make it red. Okay. This institutional cycle was built on the institutions of the US dollar. This previous institutional cycle was built on the institutions of the British pound and the British Empire. Before that was the Dutch guilder. This new one is going to be built on the rails of blockchain. Now, on one side, it is going to block and chain people. Digital IDs, social credit scores, AIs controlling value flows, the ability to freeze your assets, which is already existent. People think you can't freeze crypto. Good luck. Try stealing some Bitcoin and let me know how successful you are, right? There's that side. The other side that we're looking at, that we're building, is the one where we take the blocks and we build our homes with it. And we take the chains and we use that to like wear it as jewelry or give our swings strength, Tools are just tools. It's how we use them that determine how it's going to be. So the kind of society that we're building that is being built globally, in this process, there's a hard fork of humanity happening. There's the asleep ones who go towards a neofeudalistic system where they become the serfs, and the awakened ones, or the ones who've woken up now, go towards the society of connection, oneness, sharing of resources with automated ways, and they become prosperous, awake, abundant, conscious. That's the path that we're choosing. So in our version of the society, that's what I'm going to talk about. The other side, dystopian side, fuck it. Like, what am I going to do about it? I don't know. You want to sleep, go to that side, go to that side. I'm not even on that side, right? So on our side, it's the ability to share resources in a fair way that are coded into humanity. That's a big piece that where blockchain fits in. It's the ability to fairly participate in the growth of the next internet, the new internet. That's what we're doing today. It's building a socioeconomic structure that is fair for people. It's all of that, feeding people. And yes, AIs are going to use these computers as a value mechanism to share value. Okay, so that's where crypto fits in. Now, then we have to understand, okay, what is crypto, right? Because like, if crypto is this, it can be good or bad. We have to really understand what it is. Many of you have heard this before. If you want to delve deeper into it, you can go to this website, my website, cryptowealthprotect.com. Do not sign up for any of these services. I don't provide them from here anymore. They're only available through XLNC. This is also an old, 2 years old video, but you can watch this masterclass. You can click download my strategy here, right here. And that's the PDF that you're going to look at. And you can fill this out yourself and build your own strategy. You can watch this masterclass at the top and do the self-work. But we're going to do a bit of that today. And that's what we're looking at here. This is, again, a little bit outdated, but it's very useful for what we're doing. So the first thing we have to understand is, what is crypto? Right? As far as I'm concerned, crypto is just a bunch of computers that we connect together. In the old world, computers were connected like this. There was Google owning the computers. Then Google had users. We all paid them in attention, which they turned into dollars. Some of us pay them in dollars, and they turn them into more dollars. But they own the computers, so they get all the money. In the blockchain world, people are running the computers everywhere. Many, many people own the computers. Those computers still do the same thing. They have apps running on them, and they do useful things for humanity. But these people who are running the computers get paid for running the computers. In this old world, they were getting paid in dollars. In this new world, we pay them with these coins called crypto. That's a simple way to think about crypto. Crypto is just a new way to connect computers together in a new internet that the AIs are going to use. Soon, the AIs are going to outnumber us as far as productive units in the world, and they're going to do all our jobs. And because of that, these computers will be more valuable than the old computers. That makes sense. Blockchain is a set of computers. What makes it crypto is just an accounting book that runs on the computers. Bitcoin, Ethereum, XRP, Solana, all the layer 1 computers are just running an accounting book. And it says how many coins each person has. And that accounting book is running on all the different computers. So if somebody tries to mess with one accounting book, there's a million other copies that prove that that one is lying. So we know the truth that nobody can fuck with. And that's very useful. Banks are accounting books. Land registries are accounting books. Most things in the world are accounting books. A lot of things in the world are accounting books. Then there's the idea of smart contracts that you can put into the accounting book. So you can write a code in the accounting book saying, when I do this and she does this, then move this money like this. That's what a smart contract is. Most things in the world are contracts, right? The contracts make the world go around. So we've just digitized the same things that used to exist before by running a book that can have code running on it, and the computers and the AIs are going to run it all. And that's how it works. Okay. Now, why do we buy it? Because we know the world is moving towards a world where work is going to be done by these AIs over humans. If humans needed the computers for the internet so much that the internet became worth trillions and many humans became very wealthy because of it, what happens when a trillion AIs need to use computers? They're going to use these computers. Let's buy them first. And by the time the AIs need them, we'll sell it to them. That's the long-term kind of idea of crypto. That's why we buy it. But then we have to understand the risk that we're taking within crypto. So before we dive deeper into crypto, a lot of times I find that people don't even know what assets they have, where they're sitting, what they should move. When I ask people this question, what do you have? People go, oh, well, that's a good question. I'm like, you don't know all the things you have? Maybe you have too much shit. How many houses do you have? Oh, let me think about it. Booty, I'll ask Booty this question. Like, Booty, how many houses do you have? He's like, brother, forget to remember. I'm like, what? Does that mean you forgot to remember how many houses you have? He's like, no, it's my investing style. I buy a house and I forget, and that's investasi. And I'm like, that's a good style. You just buy assets and forget that you have them, and a decade down the road you find them. But this is an exercise that I love doing with people that we're going to do kind of a short version of today, where we draw out the assets, we lay them out visually and understand what they are. If you're watching this on YouTube, there's going to be a link below to this template. You can go in and make this yourself. If not, if you're doing that PDF that I mentioned earlier on the website, the link is in there as well. You can go and pull it from there. But it's like, okay, I'll ask you the question. Does anybody want to just do this now on YouTube? I mean, it's pretty public. Or does anybody want to do a mock presentation where you just tell me a bunch of assets and I put them down? Because it's just more fun that way. So I'm not just talking to myself. Good. I have taught you well. Never tell anybody about your assets. That was a trick question. Don't you ever tell anybody about your assets. What do I have? Nothing. Do you have crypto? Fuck no. I've never heard of the coins of the bits. I don't know what that shit is. Okay, good. Never tell anybody about your assets, especially not in a public manner. Okay, so Sim, how many houses do you have? Well, I have one place. It's about $1 million. It's a villa in Miami. Do you live in it? No. I don't live in the houses I own. That's a liability. I only own assets. Remember, if you live in the house, it's a liability, right? It's only revenue generating things that are considered assets. Do you have a business? Yes. I have a, whatever, commercial real estate place that's worth $2 million. But I have a mortgage on it for $1 million mortgage. Okay. So there's some debt on there. That's some risk. Okay. Let's make that in red. Cool. Okay. And anything else? No. Do you have stocks? Yeah. I have a retirement account. Hackers, I don't have any of these things. Okay. I literally don't have money. So like, calm down. Okay. I have a retirement account that's worth $400K. The funny thing is, it's called a 401K. I'm getting there. Okay. All right. What else? Well, I have dividend yielding stocks. And I have about 600K in that. Oh, no. Sorry. 6 million. I forgot to remember. Silly old me. Anything else? No. That's pretty good. I live off the dividends off of that. Cool. Sounds good. So you have 6 million exposure here. You have, I'd say 2 million of net worth exposure here, considering you have 1 million of debt. There's some risk here. Okay, that's pretty good. Do you have gold? Yes. I have gold somewhere hidden in Singapore. Well, I just keep about 100K of gold because why not? Just as like a little hedge. Cool. Let's make gold the gold color. That's always nice. Gold and gold brick. That's cool. Have any other commodities? No, I'm good. All right, revenue streams. What are we looking at? Well, I'm a doctor. So I make about, I make about $1 million, but the government takes half. So I make about 500K after taxes. Yeah. Okay, so you're losing half your money to the government. But you're a doctor. A doctor's got to be a doctor, and where you're doctoring, If you start doctoring in other places, you don't make very much money. So makes sense, but you got to make $500,000. At least you're keeping $500,000. Well, you also have then dividends, right? Coming from your stocks, which is a revenue generator. And then you also got this, house on rent, where you are earning rental income, right? So dividends are variable, rental income. Let's say we're making $3,000 a month. We're making about $36K a year. Well, that's cool. You're making about $536K. There's still some taxes on that. Dividends is variable, but on average, you're making about, let's say, on a good day, you're making about $400K dividends in the best of times. So you're about that like million-ish range in revenue. Cool. You got some solid business. You got some risk over here. Now you're thinking about crypto. How much to put into crypto? Well, how much cash do you have right now? Well, I'm running about $400K in all the different bank accounts. Mostly I just keep them in one country because I don't have things structured in many places. Okay, and what's your run rate? How much does it cost for you to live a comfy life right now? Because it seems like you live a pretty comfy life. Yeah, right now I'm at $15,000. Got the kids in private school, and I have a Bentley that I drive, or whatever. So laying it out like this and actually seeing the entire landscape is the first important step to understand where crypto fits into this picture. Then understanding the risks. And in this old world we come from, they said, oh, bonds are safe. Retirement is safe. Yeah. No. Like having this much stock exposure, it's all fun and dandy. But as they hyperinflate the currencies in the way that they're doing now and the way that it's going to accelerate going forward, stocks don't outperform the inflation of the currencies. As a matter of fact, stocks have basically broken even since about 2011 until now. So they've maintained value. If you're in certain tech stocks, sure, they've outperformed, but even that is not going to outperform over the long term because $1 trillion company doesn't become worth 100 trillion in 5 years. And that's where we're headed, right? The other risk here is that the ownership of stocks does not mean you own the stock. It means you own a security entitlement. And yes, I've beat this dead horse so many times, but I bet there's somebody who hasn't listened to or watched The Great Taking, which is at thegreattaking.com. Please make sure you do your homework. Watch this documentary and read this book. It's free. Literally can't make it any cheaper for you. It's from my hedge fund manager that explains this better than my dumbass. But it basically says that we don't own stocks. We own security entitlements. And those security entitlements mean that we don't have the first rights to get the stocks when those stocks have been used as collateral. Our leveraged real estate, our retirement income, our stocks, our bonds, our digital gold, all these things have been used as the collateral, not the digital gold. Everything else has been taken and used as the collateral to create derivatives and make a bunch of bets in the casinos that I discussed in the derivative talk. And when those blow up, ETA by about 2028 sometime, these are all going to be confiscated. And remember, we talked about wealth confiscation. This is one of the modalities that's been made legal, and it's in the cards. Real estate, so stocks we don't own, right? Real estate, we also don't own. It's just a registry with the government where they keep our names on the books as long as they want to let us have the names on the books. Like, you remember that time when you were Russian? Remember when you woke up Russian that one day? And you're like, I have a $100 million villa and a $200 million yacht because my name's on the registry. Right. And the next day you woke up and they were like, you're Russian. Excuse me, sir. You look a little Russian to me. And then they just went, oh, we're changing the name. And they just took it. Or you were Canadian. You went to that protest to protest something legally. And then they decided, yeah, let's change their name too. Let's change the crypto name as well, right? So there's the risk that, especially leverage real estate, you don't own the real estate, the bank owns it. Wholly owned real estate, you do own as long as you know how to get the right digital ID and social credit score and everything, they will let you continue to own it. But many of us are not part of that game either. So there's a risk of confiscation there. And leveraged real estate is exactly what happened in 2008, where they confiscated everybody's real estate effectively by creating a Fugazi product called mortgage-backed securities and blowing it up and blah, blah, blah. Made up a whole Ponzi scheme that blew up and good people lost their homes. That's about to happen in a much bigger way, right? Private equity is blowing up right now in a very similar way. It's the same game. So there are risks there, right? And the goal of investing into assets is to make more money that has the purchasing power maintained or grown. Making more numbers is useless. If the numbers buy me less stuff, it's useless. Making more purchasing power over time is what assets are about. Real estate is not one of the assets that's going to do that. It's made more numbers, but can you buy more houses with the house? No, right? Can you buy more gold with the house? Is a great way of calculating it. No, you can buy much, much, much less gold with the house than you could before. So understanding those risks is important because we've been taught in this old world, in the previous institutional journey, right? Back here, if I had said this, real estate is not safe and bonds are not safe, people would laugh me out of the door, rightly so. Here, it becomes the truth. Back here, if you would have told me that, if I would have told somebody that German bonds were not, safe, rightly laughed out of the door. Right here, German bonds became worthless overnight, right? Well, 10 years. So that same shift is happening now. So a lot of the people that are sitting in the safety of these things are actually walking right into the trap of that they want you to walk into, right? So gold is great. Gold is gold. As long as you know how to get out of the country with it, or it's custodied in a place that won't confiscate it. Singapore's nice. Hong Kong's not bad. Dubai is good. US has a pretty bad track record, to be honest. So America's not exactly the place where I want to hold my gold. Definitely can't walk out with it. That's the problem with gold. That's why, if I buy gold, I buy PAXG, the token, PAXG, which is a tokenized version of gold, because I can have exposure to gold while having the liquidity to be able to walk out. That's a really good point, Esther. But, considering between the assets, actually gold has a lower risk per se, as long as you can leave the country with it, which is a pretty big caveat. Gold is not the collateral backing the financial system. Real estate and stocks and bonds are the collateral backing the financial system. The confiscation of the assets that are backing the financial system is the norm. Gold just has a bunch of derivatives made upon it. But the physical gold, the people who custody physical gold or tokenized gold where there's actual backed physical custody, those people are still going to maintain their value as long as the governments don't just decide that they're going to take your gold, right? Okay, so there's the risk on gold, benefit on gold. Revenue streams, we want to have as many as possible and as many diverse revenue streams as possible, right? This is where when I'm talking to somebody and they join Excellency, I let them know, hey, let's add Excellency to this. It's an easy thing. You've probably been here in my community for a long time. You've seen how we operate. If you haven't, wait until you see the results. Then we're happy to give you 20% for helping other people go through the journey. And that's a good way for you to generate revenue and share the abundance. Great. Now you have 4 revenue streams, right? But looking at this much revenue coming in, if it's not invested properly into assets, the purchasing power is going to bleed away at about 10 to 25% per year, depending on how hyperinflationary we get, right? So then we go, okay, let's imagine all of that revenue is going into your cash cushion, something like that. And I would draw this a lot better, but I don't have time right now, so I'm just going to kind of, who am I kidding? I'll have a fit if it's not drawn properly. My OCD, my obsessive crypto disorder, will go into overdrive. Right, so let's imagine all of that cash is going into the cash bucket, also known as a bank account. Now that's a risk. Bank accounts used to be a safe place to keep money, but banks also have a pretty bad track record of taking all your money because we don't own the money in the bank either, right? So, first of all, diversification in bank accounts to different banks is important. In different jurisdictions becomes important. Switzerland is a really safe place to keep money. Just diversifying it between jurisdictions, right? So instead of keeping all the money there, I might say something like, depending on the person, this is where there's so much nuance to it, there's no one answer. But it might be like, oh, let's put it in a Swiss account. Let's keep a bit in a Wise account because it's a private company, which doesn't have the same kind of exposure as the public banks. Now, Wise is also a private company, so they can just block your money all the time. So I, keep a small amount in there for accessibility. Maybe some in Revolut, some in a Swiss account, some in different size banks. I recommend the biggest banks. If you're in America, something like HSBC, Chase, not Bank of America. Those guys are terrible. Citibank, something like that, right? If you're going to keep it in the banks, because we all need banks to be able to live life, right? Now, a lot of my people, we have stuff set up in Bali because it's a completely different structure, which allows us private relationships with all these people and the government. So that becomes an escape vehicle. From there, sometimes from here or just from in general, we can take the money and put it into stable coins. So you might be holding USDC inside of a Tangem wallet. I'm just speed running through this. This would, we're going to go more detailed into one of these kind of exercises, but this is the idea that you can see the flows of capital. You can see the distribution of it happening. Then we have most of it self-custodied here, right? That's inside of a Tangem wallet. Let's say inside of Tangem, we have one cash cushion wallet, which is the living cost wallet, where we have a certain amount, a TBD amount, a to be determined amount that feeds the living costs. Then there's a long-term custody wallet that's separate from the cash cushion wallet. The cash cushion wallet, I act like I don't have and I only use for living costs. The custody wallet is the one that I can deploy into different assets, right? You can have different wallets inside of the same thing. Okay. As simple as mud or clear as mud, right? Of how to spread out the money, but still mostly custody it. Now, Mr. XYZ here, or Mrs. XYZ, might say, look, I don't feel comfortable keeping millions of dollars on a USB key, which is like such a logical thing to think. Tangem is not a USB key, it's a little card, but I hear you, Miss XYZ. Weird name, though. But, whatever. It's a modern world. Then they might put some of the assets on with a custodian, which is much less likely to get hacked than Mrs. XYZ, who's always being targeted by her neighbor who doesn't like her and is always scam calling her. You know how it is. So they might keep it with the custodian. They might keep a few million with a custodian. They might put, a mill with themselves. And when they need to invest, they can do it accordingly. So okay, now looking at this, we have 2 million of exposure in real estate, 6.4 million exposure in stocks. So gold is 100K. Revenue is pretty good, pretty diversified. There's cash flow coming in, and there's millions of dollars in these different accounts. So let's say this was 4 million instead of 400K, because that's actually more realistic for the kind of people that would have these kind of spread. Now, from this place, we go back to the strategy and look at how do I want exposure to crypto, because if my goal is to thrive during these times, what's the risk of crypto? We talked about the risks of everything else. What's the risk of crypto? Well, then, how long do you have? The risk is that if you threw a dart at a wall, you have a 99.9996% of losing all your money if you just pick the crypto like that. The reward is if you hit the one that's right, the few that's right, it can make a ton of money, right? But the risk is always you can lose all of your money. But the risk to reward ratio is so balanced towards reward if you pick the right cryptos that you don't have to take a massive risk in crypto to crush it in crypto. Right? If I'm looking at this and I'm like, okay, you got 6 million, 8 million here, 8.5 million of exposure. 8.5 million of asset exposure today. You're sitting on 4 million. Even if I just put 2 million of that into crypto and kept the other 2 million, working somewhere else, 2 million in crypto over a 4-year term, if it doesn't make something like 6 to 10 million, it just something fucked up. You completely fucked it up. You probably entered at the top and sold the bottom, or whatever. So it's like, okay, then speed running, it would be something like, let's just imagine you put 1 million from here because you're a risk averse person. Now, the question I always ask here is I go, look, I don't know what you should put. That's your thing to decide, right? But think about it like this. What amount of money, if you could not touch for the next 4 years, what amount of money that you not being able to touch would not change your lifestyle, would let you sleep well? If it went up, you wouldn't mind. If it went down, you wouldn't mind. You'd be like, for 4 years, I can leave this money here because I don't need it. I don't need it to live life. I don't need it to do anything else. Right? For a person like this, that 1 million range is going to be really comfy because you already have such good exposure. You're basically making half that in a year. So 1 million is super, super comfy. A more risky person is going to, kind of a medium risk person might say 2 million. One of the degens might say 3 million. And the person who says 4 million is a fool because you have $15,000 of living cost. You need a cash cushion. You need to have some on the side. You need to protect against the business going down. You might have business costs. Out of the 4 million, keeping $1 million is like smart. At the least, this cash cushion should be 1 year of runway, which 15K gets to 150, 180, let's say 200K should be this cash cushion minimum. Now, that includes business expenses and other things. Then you spread out some money here, money here, money here, and you end up at about $500,000 kept in different places. And then you have another $500,000 in your USDC wallets and kind of spread out in the custodian as cash that you have. That way, something happens over here and business is shut down, COVID happens, you fall ill, something happens, still have a cash cushion and you have a living cushion over a year, and you have some extra cash to be able to live on the side, right? It's important to have that there. But let's imagine this is a medium risk person. We go with 2 million. Okay. Now we can understand how to make this spin, right? Now, my recommendation would also be to use some of these profits to deleverage this house so you don't get caught up in a mortgage-backed security meltdown. So deleverage, which means pay off the mortgage from the profits. We're going to talk about that in a second. I would reduce exposure here over time. It's not like it has to be done yesterday, but I would reduce exposure from here and add that to crypto as they both hyperinflate in these times. What amount that is, you decide. I would wait for this to multiply and then take the tax hit and unlock it from this account, from the retirement account. And again, this varies upon the person, upon their situation, upon the jurisdiction, upon what kind of stuff they have. Some people might just take this and put it into a self-managed retirement account and get crypto exposure that way. Something like that, where I would make it so that it's not in the cold, dead grips of the bankers who decide to put it in places and then have a oopsie and lose it all the time. Like you're experiencing right now, where people give money to BlackRock and they're like, can we please have our money please back? And they're like, please fuck please off, So you gotta get it into your own hands somehow, right? But this is the way to kind of make the money flow around visually and lay it out in a way that makes sense to you. How you do this is for yourself. If you need help doing this and you're part of Excellency, we have a package for that. If you're not part of it, why aren't you part of it? I'm just kidding. Like, if I know you well enough, we can just jump on a call and do this. That's to understand the risks of this whole process and understand the risks between the different asset classes. Now, once you have an understanding of how much you're putting in, right, then we come back to here, to the strategy. And we say, okay, what is your risk tolerance, right? That question that was asked, how much money could you put away for 4 years and sleep well, is a risk question. Like, ask yourself the question, how risky of a person am I? Am I somebody who goes to sleep knowing I've risked a lot in my life and I sleep well? Or am I a person who frets and gets anxious when I have a little bit of risk and I can't stop thinking about it? Because the secret to making it in crypto and through this chaotic world is sleep. Trust me, I know. Look at these bags. Okay? Like, it's sleep. If you sleep well for long enough, you will make it through this thing. If you don't sleep well, you'll probably just die before we even get to the promised land. Or you'll just freak out and make the wrong decisions, right? So how risky of a person are you and how much risk are you comfortable with is a question to ask yourself. If you say high risk as a person, I can understand that as a fellow high risk person. But still, you should start at a low risk investing portfolio. If you're a medium risk, great. You should still start at a low risk investing portfolio in crypto. And the reason is that the mistake everybody makes in crypto is they walk in and they go, I'm a high risk person. I'm going to bet it all on black. I saw that fart coin is like the shit. Like, that's funny, right? Fart coin's the shit. Of course, farts are the shit. But beyond that, astute observation. People just bet it all on black because everybody else is doing it. So if you come into crypto and have the mindset of, how about this? First step, just don't lose all the money. And for that, you start in the low risk range. So what I would do here is I would put, I am a low risk investor. Okay. Then we do this wealth mapping exercise to understand how much money is going to come from where. How much is too much risk? How much is enough that I can sleep with it? Where's it coming from? Where's it going to? You just saw that whole exercise happen. That really helps you understand the kind of journey of it. Then the strategy that I would recommend for beginners is just 90% in top 10. I would even say top 5. 90% in top 5 coins. And you can lose the other 10% anywhere else on farts. There you go. That's a good little strategy. You can put 90% in the top 5 coins and you can lose the rest of it somewhere else. And do think about it like that the 10% that you're putting somewhere else, imagine you've lost it. Then one, you'll be more careful putting it somewhere. Secondly, it's a high risk bet, right? That's why with FarmCent, all these ones, I'm not letting anybody put more than 2 to 3%. Because it's like, if you lose it, you lose it. If you make it, it's gonna be life-changing money. So think about it like that. 90% goes into a safe place. Once you've multiplied that, then we get to play some riskier bets, right? Even in Excellency, like what we're doing is we're taking all of the money and we're putting it into 3 top 10 coins. The risk we're taking is, yes, when it goes up, we're going to sell it with the risk that the market runs and then a tradies gets us back in. And we're going to sell it and we're going to rebuy it, but we're just going to keep selling and rebuying the best coins again and again and again. And even done half-assed well without the perfect Katana catches and top selling and stuff, it still ends up at an amazing return, right? But that's difficult to do. We're gonna get into the details of all that. Okay, so let's imagine you're gonna put in $2 million out of that whole amount. Your risk you're gonna take is low risk. 90% is gonna be in low risk coins. I'm not doing goals and a lot of this stuff because I have to kind of speed run a few things. But even the goals, like goals is something important to talk about, right? Like when I ask people, when I was consulting people all the time, I would ask them, why do you want to go on this journey with me? And the moment they said, I want to make more money, I would end the call. I wouldn't just hang up. I'd be like, yeah, sorry, I'm booked. Can't work with you. When somebody would be like, I want to provide a family. I want to provide a home for my family. I want to live my mission. I want to leave a better world. I want to take care of my mom. I want to, make sure I'm healthy into old age. There's kind of like real, genuine, deep missions that are bigger than the money. Those are the people that I liked working with. Those are exclusively the people that I worked with. And that's also why you guys are like, wow, this community is so amazing. Yeah, because it's only those people, right? Everybody else I didn't work with. And it's because those people have success, right? When the shit really gets bad, the person who's working to make sure their mom has a house doesn't give up, is resilient. And the person who's trying to make numbers loses everything, right? So having a why that is big is really important. Having a why that is a why worth having, a why that nobody can ask you, why do you want that? So if you say like, I want $1 million, why? You think it's going to solve all your problems? It's actually going to give you more problems if you have problems, and we all have problems. Okay, like your why should be something big enough that it is bigger than the money, because when the times get bad, that why will drive you and keep you resilient. Otherwise, you will give up and lose everything. Strategy, 90% low risk coins. Then we get to the where to do it. Let me just make sure I'm not skipping anything. Then we get to the where to do it, right? So this is where there's so much nuance to the journey, because where to do it is a question to ask after who's doing it. Is it a person doing it? Is it a company doing it? Am I in Dubai? Am I in Bali? Am I in Wisconsin? Right? Those three places are going to have three different answers to who should be doing it. In certain places, you want to be an individual doing it because you get tax benefits. Like Bali, you get 0.21% tax. As an individual, easy reporting, auto-taxed, auto-filed, auto-everything, right? Plus, you get the money in your personal bank account. You can do whatever you want with it. In a place like Dubai, you may want to be a company that's doing it, but you still actually want to be an individual that's doing it. You get better tax treatment there as well. If you're in Austria, you may want to be a corporation that's doing it in a way where they're not trading into fiat, but you're trading into stable coins because you get taxed in fiat. So on and so forth, right? So there's going to be an AI attached below that I've designed. That'll be a tax advisor, tax consultant, not an advisor. YouTube, this is not advice. Do you hear me? Some kind of tax dude. I'm just gonna name it tax dude. There's a tax dude. You can ask a tax dude questions. I live in this place. What do you think, tax dude? And tax dude will tell you the details. So should you be a person doing it? Should you be a corporation doing it? That's going to determine who's even doing it. A lot of times corporations have benefits because you can deduct expenses and do a lot of funky stuff. So in a lot of places, you may want to set up a company to do this over a person. So who's doing it? Let's imagine, in this case, Mr. Million, let's just say an individual is doing it, because many of you guys are doing it as individuals. Okay, individuals doing it. Where is this individual doing it? Is the next question. And a lot of times people go, well, where am I doing it? Where I live, right? Where I live. And that makes sense. Now, have you thought about not living where you live? Is a question to ask yourself. Is the place you live the place that treats you well? And do you see it going well around you? Does it look like it's going in the right direction? And many places that look like they used to go in the right direction, used to be the best places to live on earth, are not going in the right direction anymore. So do consider the idea of changing where you live. Yes, Bali's great, but also Bali's not for everybody. Like if you come here and you're not a spiritual person, she'll fuck you up, bro. She'll do a number on you and send you away. Okay, like you have to be a little decently woo to make it around here. Okay, but there's many places around the world. Dubai used to be great. I don't know what happened. It used to be great, but something happened apparently. People are saving a lot on taxes over there now, right? So there's different places to go to, but just think about it. If you can't move, then you're like, okay, well, I definitely have to do it where I'm doing it. Now, maybe where I'm doing it, I can set up a company to do it better, right? So there's ways to navigate the journey. Okay, let's imagine a person is doing it and you're living in the country you're living in. This person is a person living in, I don't know, Germany or whatever, right? Then you're going to determine where to do it, the exchange to do it through. And the way I determine exchanges is I look at the risk of holding my assets on the exchange. This is where I differ from most crypto heads. You know, most crypto heads will say, not your keys, not your crypto. Grandma, you should remember 24 words. Bro, grandma doesn't remember your name. Okay? Like, getting her to remember 24 words is just me. Grandma, I don't remember that shit. Right? So for me, I'm like, I trust an exchange to hold your money over you holding your money until you're a professional at holding your money, which takes you, losing your money a couple times in crypto before you become a proper professional. Trust me, learning from a professional. So picking an exchange where you can at least hold your money during the good times is important. For me, the way I look at the exchanges is I look at how the exchange is structured and who owns it. That's why I love Kraken, because it's owned by the elites, made by the bankers, for the bankers, made by Silicon Valley, for Silicon Valley. Effectively the owners of the world at this point. It is backed by US dollars. It is now has a Fed account, which I saw coming from miles away, right? All these things together, and they have vetted security. They have tight security protocols. They've never been hacked, never lost any money, a custody service. Every kind of green box that I can check off, it gets checked off with them. But you can go to CoinGecko, Kraken, right? You can type in CoinGecko Kraken. That is not it. You go to Kraken statistics, right? And it gives you a trust score where they've done this work to make your life easy because you're busy. They've also then given you statistics on which currencies are being used to trade on Kraken. You can see the volume by pair. So actually, USD pairs have most of the volume. There's a little bit of Euro pairs, but mostly USD pairs, which means actual US dollars now being custodied with the Fed are what they're using to trade, which means they have the dollars, right? And they also have verified their reserves, which means they have the crypto, right? They don't do funky stuff with your money like FTX and other people. Volume by currency, you can see it here, right? Mostly it's dollars being traded. Then there's euros, a little bit of Tether. Tether has its own risk, but it's been minimized quite a bit now. But mostly it's dollars. So we prefer some place like Kraken. And with Kraken, there's an OTC desk. If you're trading over $100,000, there's a person to speak to. We directly, as Excellency, have VIP relationships with them. We have people we know there. They give us fight tickets. Some of the people who got tickets are here. I'm not going to name who in the interest of privacy. He's gone. So Kraken is a safe place to keep money. Binance is a shit place to keep money. Why? Because Binance plays the biggest games. You could check the same score on Binance and it's 10 out of 10. Binance plays the biggest games. They attack their own users. They make fake volume. They have a ton of coins that are... so let's look at Binance. $10 out of 10 score. Way more volume. Most of their trading is happening against Tether. And still, they're not the worst. They're not as bad as many other ones. But you can see, like, volume by pairs, 36% of the volume is something else. It's not Tether. It's not USDC. It's not dollars. It's something else. I don't like something else, right? I like my dollars and euros and all this stuff. Volume by currency, 62% is Tether. Okay, fine. 7% is USDC. One day they will attack Tether, right? So this is something important to understand. Right now, Tether's fine. Tether's probably going to be fine for a long time. It's too big of a bomb for them to drop for a long time. But there's going to come a time when I'm going to force all of you guys that are trading on USDT, we're going to switch you over to USDC. We're probably going to force you to switch over to exchanges which are not exposed to the tether risk. None of the ones that we're working with are exposed to the tether risk, right? But Binance is shit, so we don't choose Binance. That's why we've chosen Coinbase, because they're another Kraken, but they don't like giving you your money back as easily. Kind of annoying, but they're very, 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 very safe. That's where the biggest institutions trade. Coinbase, Kraken. Kraken is number one. Coinbase is number two in terms of safety. Bybit is number three in terms of safety and the relationships. And OKX is number four in our kind of perspective. Also because we have private relationships with all of them except for Coinbase for now. Depending on where you are in the world, you will be able to get some and you won't be able to get others, right? This is where, again, ask an AI. Sure, the tax advisor AI you can ask. Tax dude, man, guy, girl, thing you can ask. But it's like, you might say, I'm in this country. Give me how to trade, and then which exchange can I use? And it'll tell you can use this one or you can't use that one. Dubai can use OKX but can't use a bunch of other ones. America can use Kraken and Coinbase and can't use the others. Bali, we prefer using OKX and Bybit because you can't get the others, right? So it's going to depend on your structure as to which ones you choose, but that is the place where you go to trade. And all of those are safe. Otherwise, you can do this analysis on many other exchanges, but you get more into the risky pool end of things as far as where to do it. Now, again, are you a company doing it or a person doing it? You get a corporate account or your personal account with one of these exchanges. You could get multiples. If you want to connect it to Excellency and you want to have a trading account on Kraken, you can just set up a second Kraken account, one for us, one for you. If you're on Bybit, you can have a main account and a sub account. That's for us. Main account is for you. On Coinbase, you can have a portfolio. So one portfolio is for us, one portfolio is for you. That segregates it. On OKX, it's the same thing with sub accounts, and you can set up different accounts and segregate that. Or you can, have different accounts for family members or people or robots. I don't know if you're already trading about robots. That'd be pretty weird. Okay, now we just got to the point of even investing, right? It's understanding the bigger picture. It's understanding the details and getting to this point of actually investing. Then we say, okay, how do I pick what to buy? Is always a question. Good question. This is how I pick it. Nice and easy. Just takes you half a lifetime. But, you read what it's about. What does it do for humanity? Like, what does it do that's so valuable that humanity would pay for it? That's one question. Second question is, where's the money coming from? Because if you can't answer that second question, where's the money coming from? It's coming from you. They say if you can't find the sucker in the room, it's you, right? So what does it do for humanity? And do you understand it? And do you understand the value proposition for it? And can you understand where the money's coming from? At the least, can you understand when the money's coming so you can get out of the door first, realistically, in crypto? Then we look at the team. We look at the people behind them, their experience, being insiders. We look at, who owns it, who's behind the people who own it, which VCs are behind it, how do those VCs operate, and what history do they have? Do they fuck projects over or do they make them good? Then we look at the tech and innovation. What's the technology? How is it built? Check the code. How are the tokens shared? What are the tokenomics? So on and so forth. Then we get down to history of the trading, the volume, how much wash trading is there, which exchanges is it on? Are the prices just going up at a time when everything should go down? All the kind of nuances that we discuss. We look at the market and the trading side of it. And then you dive deeper into the, does it sound like a scam? Is the economic, like Luna? That was hilarious. Like, all of us could see it from miles away. You guys know, like, all the people in my community, we were like, stay away from this shit completely. We didn't touch it with like a 17,000 foot pole, which is about 4,000 meters, or 4 kilometers, as astute observers would translate. But danger signs you can see for a lot of these things. So an easy way to do it is 99.9996% of cryptos are scams. So ignore everything but the top 100 cryptos first. Because last I checked, out of 2 trillion market cap, $7 billion was below the top 100, and most of trillion dollars was above. So the top 100 accrue all the value, right? Then ignore all the rest of them. Now you've mitigated your risk. If you go into anything below that, understand you're putting money in that you could lose it tomorrow. Yeah. So I'm getting to it, Gabe. So it's like you ignore the top one, everything but the top 100. Then out of the top 100, you ignore 90 of them again, right? Then you just look at the top 10. Now you've mitigated your risk down to the top 10. Now Luna ended up being in the top 10. You could have still lost all of your money in the top 10. So it doesn't make your risk zero, but it mitigates your risk a lot. Then remember we said 90% of the money in the top 10. No, I said top 5. Glad you've been listening, Sam. So 90% in the top 5 first. Once you multiply it a bunch, then we get to buy other stuff, and then we get to go lose money there. But running all of this analysis, checking if it follows the law, is it a privacy coin that violates it, so on and so forth. So all of this analysis is that we run to be able to know which coins to buy. You probably don't have the time for that. That's why you're listening to this in the first place. That's why you're part of Excellency in the first place. Yes, we've done all this analysis, and that's why we picked the coins that we picked. That's why for us, some people are getting Ethereum, but most are getting XRP, Solana, and Doge, because they meet this metric in a massive way and they work well with the strategy, right? Because the next thing to consider is, how are you investing? What is your strategy of investing? That's going to determine which coins you buy. Because most people say HODL, which isn't just hold misspelled. It means hold on for dear life. HODL. And dear life is what you hold on for, my friends. Those of you that have been hodling, you know how much life it's taken to hodl, right? It's no joke. It's low risk, yes, that you hold on to it. People think, the Raouls of the world will be like, yeah, just buy the dip. And when first of all, let's talk about Raoul's strategy. People don't listen to the guy, right? He was like, look, here's the plan, okay? Here's the plan. When there's a dip, buy. How do you know it's the dip? You never know it's a dip, but there's a dip, you buy. If it dips more, you buy more. If it keeps dipping and you run out of money, shut up. You bought the dip. That's what he said. Then it goes up. You do nothing. Then it goes down. You do nothing. Then it goes up. Still do nothing. Then it goes down. Still do nothing. Then it goes up a lot. Then you take a little bit off for your lifestyle chips. For this person who's putting in $1 million, $2 million, and they had $15,000 per month of living costs, they might take out $400,000 living lifestyle chips when they get to 4 million. Okay. Lifestyle chips out. Then it peaks. He says do nothing. Then it crashes. Buy more. Right? That was the plan that was given to everybody the whole time. And people didn't listen to that part. Wait a minute. Hold on 1 second. 1 second. You said it goes up, it goes up, it goes up, it goes down. I buy more, but I don't have money in the first place. I put it all into crypto. But okay, maybe I have pennies. Okay, I buy more. Then it goes up a lot. Okay, and I take out just enough to live. Okay, so I can't spend that on assets. Okay, and it's not like I'm making more because I don't get to put more money into my business and, still have a job. Okay, and it goes really high. My 2 million goes to 10 million, 20 million, and then it crashes to 2 million. And you want me to buy more? But I don't have money. That's my living money. But it was at 20 million. And it's down to 2 million. And you want me to buy more? People aren't really doing the math. But that is the safest way to navigate this journey, because normally people have no idea where the top is, no idea where the bottom is. And he's right. He's 100% correct. That if you run that over the next 10 years, you'll just keep going through the waves. And on the other side, you will win. Right? And then people blame him he fucking didn't tell me it was the top. He never told you it was gonna be the top. Their frameworks didn't say it was gonna be the top. So there's that strategy. I don't like that strategy. I'm like, why would I watch it go to 20 million and then let it crash to 2 million? If I started at 2 million, why don't I follow this other plan? Okay. So what we do is we do active investing is the strategy that we use, which says when it goes up, we sell it. And when it goes down, we buy it. Right? Now, that's easier said than done. It's like, yeah, we sell it, we buy it. How do you know when it happens? You don't. You have to live this market to be able to understand it. But the framework that I'm using is this framework that you've seen before. That my framework assumes levels of volatility increasing on both sides over time. So it's like it goes up, we buy it. It goes up, we sell it. Let me change it to something other than red. It goes up, we sell it. It goes down, we buy it. It goes up, we sell it. This is gold used as a proxy. This is why I've been so successful in what I've been doing. Because I assumed that the yen panics and the Trump crashes and the whatever you call it is coming are the norm nowadays. So when we have these pumps, we sell it. And when we have these drops, we buy it. Right? Now, sure, we're probably not going to catch all of them. We'll fuck some of them up. It's like maybe it goes up and we sell it and then it runs up again. Guess what? Atreides gets us in again and we run up again. Right? That's why I love Atreides. It's like it's such a beautiful system to get us back into the game again. Katana catches are very obvious, or they tend to be very obvious, right? Yeah, we nailed the last 3 Katana catches perfectly, and this next one we're going to nail, right? Because it's really obvious. Like, who couldn't see the Trump crash coming? Like, it took months to happen. Now this one's taking months and months and months of rolling over and oil exploding and gold. Like, in the previous call, somebody said, hey, you made this obvious. This should be obvious. I don't know. It's obvious to me when the whole world blows up like this, but it's because I look through this lens of life, right? But active investing is that. It's like 1914, buy it. Maybe you let it run up for a while, and 1915, you sell it. 1915 and a half, you buy it. 1916 and a half, you sell it, and so on and so forth, right? The track record that we have has been to hold things for about 6 months, right? It was like buy it around here. I started buying a little too earlier in that time, but still buy it in this zone. Oh, I can't move this page. Buy it in that zone. Make it like this. It's a little easier to see. Okay, this is like 2022-ish sometime. Buy. Hold until 2024, March of 2024, right there. Sell. Hold the cash until August of 2024. So March to August, holding cash. Buy. Then, what was it? December? Yeah. December, right around here. Right. Somewhere there. Well, technically somewhere there. Sell in December. From August to December, hold. December, sell. Hold cash until April. Buy right there on the Trump crash. Hold until October, sell. This one was nice and lucky because it was like October 3rd, sell, October 11th, buy, and October 25th, sell again, right? And then sit on the fucking cash for months since October. Like, these big waves are pretty easy to see. The kind of zoomed in waves are harder to see, right? So the active investor strategy is that. The volatility framework is what allows much more nuanced kind of perspectives on when to buy and when to stuff. And then on the upside, it's just Atreides, right? Like Atreides running on this. Ooh, updated version. Is that, right? It's like on the upticks, Atreides is in. On the downtick, it's out. Market runs again, it gets back in again. Sure, you missed a little tiny bit there, but that's the whole point. It gets in again. It got out at the same time. March 2024, it got out, right? And then it got in little bits here and there and actually made little bits along the way. I got in here, it would have got in here. The idea is on the upticks, it's in, on the downticks, it's out. On the upticks, it's in, and on the downticks, it's out, right? That's an active investor strategy of being able to look at when to get in and when to get out. Now, If you're just following algo, sure, there are times when, you know, it gets in because the volume goes up and it goes down a little bit. It gets in and goes down a little tiny bit. Like in crypto, that is magical still to get out with like 1%, 2%, maximum like 4% loss or something. Like that's magic, right? But our investing strategy is active investing strategy. So when it gets to 20 million and we get out at 18 and it crashes to 2, I want 9 times as much crypto. Now, that is one perspective, right? But we're still not, that's still not the game. That's still the greed mindset. There's another piece to add to that, which is this piece. Because my mindset in crypto is this. Our money is not just money. It's blood, sweat, tears, snot, piss, and shit, and bile. Right? That we spent away from our loved ones, usually doing some hard shit for a long time to earn this thing we call money, right? To put it into the markets and keep making more with it is exactly the scam. To put it into the markets and multiply it and then take out the blood, sweat, and tears and never let it get lost again is the milestone, is the not losing the game. So there has to be that milestone. So for this person, $2 million in, I would say at $6 million, take out $2 million if they're a low risk person. If they're medium risk, I might say at 6 million, take out 1 million, which leaves 5 million. Then at, I don't know, 8 million for a medium risk person, take out 1 million. And do not put it back into crypto. Who cares about how much more money you could make? Now look at how much less money you can lose, which is zero money that you can lose. Now you're playing with house money, right? That's the game. That's why we've had the kind of success we've had. This has been the strategy. You know, for a long time, we were just running a basic strategy that says put money in, when it multiplies, take out a bunch of money, you know, and go do something else with it. We're going to talk about that in a second. But that is the active trading strategy plus kind of a laddering out strategy, right? Now, you would ladder out at a certain range. You decide what that is, right? Depending on when you enter in the market, that's where there's a lot of nuance around this. There's no one answer to this. But the idea is at some point set a milestone that says when it's this much, it's a lot of money, and I just want my money back, right? And you take out your initial investment. Once you get to that point, then you're allowed to go do a whole bunch of other fun stuff with it, okay? Now, another strategy that people use is called trading, which is like day trading or swing trading. You're going to lose all of your money if you do that. If there's 100 of you listening, which there isn't, there's 34 of you listening. Let's say there's 100 of you listening. 95 people's brains are not built to be a trader. My brain is not built to be a trader. I know. How to do it. I would never do it. It's the most, you have to be a robot to do it. Right. And 95% of people are not built to be traders. 5% of people do have the mindset to be a trader, but only 1 out of those 100 has the discipline to execute a strategy like a robot again and again 1,000 times to actually have the kind of success that's required for trading. Otherwise, you're going to lose all your money. All this like learn how to trade stuff, if it was that easy, we'd be all rich, right? So that's something not recommended. Hodling, sure. If you have 10 years and you can take the pain of markets going down and you can buy the solid assets, hodling works. But the pain you feel when it goes down, like you lose sleep, you lose relationships, you lose your health, you lose hair, you lose your self-worth, you lose respect from the family. Like, there are things way more valuable than money that people have to deal with that I work with constantly, have worked with. That's why I kind of stopped working, because I was always just hearing so much pain from people, and I'm an empath, so I would carry it with me. Like, people go through a lot of shit because they clicked a button and they're holding some stuff, right? So yeah, it sounds easy. For me, that is not low risk. No, the risk is I lose myself. That's way too high risk, right? But it is a strategy people use. It doesn't work that well anymore because people just don't make it through that whole thing, right? If it worked that well, I would be doing it. So we pick the coins, let's say it goes up. Then the profit taking strategies. We just talked about that now. That there's the get in, get out strategy. There's in the get in, get out strategy, you might actually get in, get out partially. Some people might say, when things go up, I take out 50% and I leave the 50%. So in case it runs up, there's a few different ways to do it. There's the hold it all the way through and just write it up and write it down strategy, which doesn't make sense to me. There's the trying to call the little short-term things strategy, which doesn't work that well. There is the strategy that's worked well for people, which is like buy here, when it doubles, take out 20% of the initial that you put in. When it triples, take out 20% of the initial. When it quadruples, that's a strategy that we followed for a long time that worked well. But still, that would mean we'd get the initial capital out and the rest would be sitting there and we'd let the rest ride down. And I'm like, that's just stupid. Like, I don't want to do that anymore, right? So, but that is a lower risk strategy that some people use that gets you liquidity events and cash events. So, okay. So let's imagine you're doing that. You're following one of these strategies. You made the money. You got a standing ovation. Because making money in crypto deserves a standing ovation. Because 90% of people in crypto lose all of their money. 5-ish% lose some of their money and get away with some. 4% make a decent bit of money. And 1% take everybody's money. Like, that is about the statistical average of crypto. 90% lose everything. 5-ish% don't lose everything, but lose a lot. Enough. 4-ish% make pretty decent money, and 1% wipe the floor clean with everybody else. Right? That's the game that you're playing. So if you make money in crypto, it is congratulations, right? So then the moment you actually make money in crypto, it's really important to think about the sell button, because the moment you hit the sell button, you do something called a taxable event, right? So that's an important piece to understand. When you buy crypto, it's not a taxable event. If you take dollars and you turn into stable coins, you buying the stable coins is not a taxable event because there's no profit. When you take the stable coin and buy Bitcoin, that is not a taxable event because it's a purchase. When you take your Bitcoin and buy Ethereum with it, that's a taxable event. Even though you didn't go back to dollars, that's a taxable event. Tax is charged at that point. When you take your Bitcoin, your Ethereum and sell it back to dollars, that's a taxable event, right? So these are all points of taxable events to think about. The best thing about anybody who's in Bali, don't worry about it. Your taxable events are all auto-calculated, 0.21% tax on the total. There's no capital gains. Done. Everything's handled. Exchange handles it, auto-files it. You don't have to ever think about taxes. If you're in a jurisdiction that doesn't have taxes, you're in Dubai, you don't have to worry about taxes. Just dodge the missiles, But that's a taxable event. You have to understand that it's a taxable event. So let's say this Mrs. XYZ takes 2 million, turns it into 20, wants to sell everything and leave. If she hits the sell button in, I was going to say America, but America's America. In Canada, she's going to pay $10 million in taxes. If she had left ahead of time, let's imagine she got in at 2 million and it went down to 1 million and then it went to 20 million. That's usually the realistic story that happens, right? She gets in at 2 million. It goes down to 1 million. She should leave the country at that point, because if she leaves at that point, she has to sell her crypto to market and pay taxes on that. And she has 1 million of losses, which means she gets to tell the tax authorities, I have $1 million of write-offs that you owe me in my capital gains. I bought 2 million, I'm at 1 million. She sells and rebuys the same amount of assets so she doesn't lose any money, leaves the country, changes her tax jurisdiction to a place that treats her better, and then goes from 1 million to 20 million and ends up paying 0% taxes on that. So saves $10 million in that arbitrage. So if you're thinking about leaving your jurisdiction, Most people think that they should wait until they make a lot of money to leave. That's actually the reverse way of thinking about it. The smartest people, they actually leave when their crypto's at a loss, and then they write it off against their taxes, and then they, go somewhere else and set up their tax jurisdiction. But that taxable event is tied to your tax residency. Where are you a tax resident when you hit the sell button? That's a core thing to think about. There's a lot of nuance to this depending on which country you're in, but the simple way to think about it is when you hit the sell button where you owe taxes, that is the taxable event that applies in the tax residency where you are, right? So think about that. That also then ties into tax loss harvesting. That if you have losses, like right now, there were a bunch of people that had losses, and they asked me, Sim, I'm sitting on 50% losses. I want to join Excellency. I have to make money, I have to double my money just to get back to break even on this side. Is it a good idea? And I was like, yes, because one, when you sell at a loss, you get to write off the tax losses on your taxes. Tax loss harvesting, it's called, right? Harvest the tax losses. Then when you sell and now the market crashes and we buy lower, we get more crypto. So let's say it crashes 50%, we get double the crypto. It runs up at double the speed. Plus you have the tax losses to write off against the gains. So that tax loss money gets made back and more money gets made back. So it makes sense, right? Doing this at the wrong time can fuck you up. Doing this at the right time, it makes sense. So like understanding tax loss harvesting, understanding the taxable event and your tax residency put together is going to determine if you make, 50% gains or if you make 100% gains. Now, a lot of tax residents think that they have to leave their country fully and like somehow, vacate their country. No, there's many people here in Bali that live in Europe, that live in a lot of places other than America, that live there for 5 months and 29 days. And then they come here for the rest of the time, or they go somewhere else for the rest of the time, and they're not tax residents of the country. So you still get to visit your family, you still get to live the way that you like, but you just can buy business tickets to get to them, or private tickets if you're a baller. But people don't think about taxes, and most people haven't even gotten to the point of hitting the sell button, so people haven't even thought about taxes, right? We'll do a whole thing about taxes, but when you take profits, taxable events come in. If you have losses, harvest them. If you can buy it down lower, great, right? I think that's probably why you're here. You're just waiting until the end when I do the market analysis and tell you what's going to happen. You don't even care about listening to most of this. You just do this because you're like kind of doing me a favor, and which I really appreciate it. You're really nice people. You're so sweet, I'm just kidding. I'm just shut up, Gabe. He's like, yeah, of course, bro. Shut the fuck up and get to the point. Okay. So getting to the point. Hey, there's a 30 minutes more for me to rant, okay? And then we get to the point. Okay. Congratulations. You, sir, ma'am, have taken your money. You have protected it. Let's go back to this. You have taken your money. You have protected it in different places, in different jurisdictions, right? Some's in Bali, some's in Switzerland, different bank accounts, different wallets, different custodians. You got a cash cushion. You made it. Business is going good. You got a new revenue stream. You're just making fat change from just helping people make money. You put 2 mil in, magic. You executed it, nailed it. You have now made a very long line that you can't delete. You got to move up. That's how life is. You have made $10 million. You have minimized your taxes somehow and kept the $10 million. Magic. Now what? You just put all the 10 million back so we can lose it again? No. You take 2 million and you put it in your fucking custodian or some, I don't know, maybe you wanted to get a home and you didn't have a home, you put it over there. Maybe you're a gold person, you buy some gold with it. Maybe you put it into your business. Maybe your health was suffering. Maybe your relationship was suffering. Maybe, whatever. The valuable things that are existing, you take your damn 2 million and you put it somewhere, anywhere other than where you can lose it so easily, right? You put it here. You put it into some new businesses. Then you take the 8 million and you cycle it back into investments. Now you can't lose the money. Congratulations. You have officially achieved the state that nobody achieves in crypto, right? Then it's like, okay, well, 10 million is a lot. Well, 8 million is a lot. Well, I'm going to put 6 million back. Okay. I'm going to take $1 million and I'm going to buy my mom that house that I wanted the whole time. That was the whole point, right? Mom's house. Let's get mom a house. Mom's palace, let's call it. Okay. Get her a palace. If you're like, man, $1 million doesn't buy a palace, come to Bali, bro. $1 million buys you a cliffside, ocean front, blah, 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 in the north side of Bali. Okay. So you bought her a palace for $1 million. Congratulations. Life's goals have been achieved. You have delivered one of the karmic points of life to take care of your mother. Correct. Still $1 million left. So this is where, down the road, the issue I had last time was the same thing. You know, we made people a bunch of money in the last cycle, and people were like, holy shit, Sam, I can't believe this worked. And I was like, yeah, kind of the point. It works. And they're like, but I don't want to keep all this money in my account. Like, what are we doing with it? And we went into the bear market properly, and we're like, we're not putting it back into crypto. It might be a year, 2 years of sitting on this money. They're like, let's go find businesses to put it into. Let's go find cool things to do, right? So at that point, we're going to find businesses to put it into. So a few things that we're already looking at is it's going to be difficult to draw on this, but in Bali, they just built an airport up north. It's going to be a bigger airport than down south. Land is $130,000, 100 square meters in down south. Up here, it's $100. Disney is putting up a Disney World. Universal Studios is putting up a Universal Studios. They're putting up toll roads all the way up to here. We have 70 hectares of land. So we're already prepping a bunch of land to put up units for people. I'm constantly being asked by people, hey, like, how do I really make it through this entire process? We're talking about crypto right now. We're going to get to like the community part of it, which is like food, land, water, community, trust. You get those things together, we're good. So we have 15 hectares prepped right now. We're going to put up 100 places there. 1, 2, 3, 4, 5 bedroom places, depending on what people want. So there's going to be that. Some people are like, look, I want to make a bunch of money, but I want to escape hatch. So if my family needs a place, get me a place. Some people are like, I want to move there. Some people are like, make it a Airbnb until I need to show up. Some people just want to generate revenue, you know? So Bali real estate is something huge that we're going to do. There's also a jet car business that's coming. So there's, jet cars are going to be great. So we're going to buy a bunch of jet cars. They sell themselves. It's a great money-making business. And who doesn't want jet cars? So there's going to be different kind of investment vehicles that we bring out. So we can take the money and not just keep putting it into crypto, put it into hard assets, put it into assets that actually make money, revenue, put it into assets that are actually valuable, security for the family, food, community, freedom, moving to a place where you have housekeepers and people who clean your fucking toilets so you can do more important things, and you get to love them by giving them a job, like, a place like that. So there's those kind of opportunities that are going to come out. So let's say this person takes $1 million and puts it into a real estate play. They're building a villa and they're building 4 one-bedroom villas and they're putting $1 million into that and they want to generate a bunch of revenue. There's a Bali real estate. Still, they got 6 million multiplying in the market. If they already turned 2 into 10, turning 6 into some number, now you know the game, right? So these are the loops that run. Take money, make money, take money. Never lose money. Make money, take money. Get mom a house. Make money, take money. Do something else with it. Make money, take money. So that it's the loop going through this. One day I will scream at all of you to take your money out of excellency. We are going to hound you, hunt you down, find where you live. You've already told us. and seriously, like, tell you, yo, take out the fucking $1 million that you put in. It's at 7. Take out the million. After that, you can't lose any money, and then we can sleep better knowing that you're de-risked, right? That's the game that we play. Now, that's the de-risking side, right? Then diversification into security, you just saw. It's like maybe real estate is some security for you. Maybe setting up a different jurisdiction is security for you. Maybe mom's house is a security for you. Whatever that means for you. Adding some to your cash cushion, if that's running out, that's key security. So your family's good to go. If you can get 4 years of cash cushion, now you're really crushing life. Building an exit plan, that's this Bali plan, right? Investing into your mission, that's important. Your purpose. In a world where people don't have jobs, you having a purpose, you win the game. As the money's coming out, the way you should take out large amounts is OTC desks. OTC desks, over-the-counter desks. If you're part of Excellency, let us know. If you're above $100,000, we can get you the relationships. You get way better pricing. You get way lower fees. You get transfers from banks, which your bank will never question money coming from because they move billions of dollars. You get better paper trails. You get concierge groups, all that kind of stuff. So, like, high net worth people moving your money, you pull that out of OTC desks. You can also spend that money directly because, let's be honest, what's money about? It's about spending it, right? In the end. So one of my favorite ways to spend money is this, Carta. You can have a personal or business account. Carta is right now a virtual card, but you're also going to get metal black cards. It's within Telegram. That's why it's my favorite, that it's an app within Telegram, a credit card built into Telegram. So it's not dependent on all these countries and jurisdictions. And you still have to register and verify with KYC. But I like the fact that it's in Telegram because Telegram has a wallet. You just transfer your stablecoins to it, tap it wherever you like, and you can spend as much money as you like. No limits, no questions, no stupid shit that banks love to do. If you're in Indonesia, you use your Indonesian driver's license and your Indonesian bank account to prove your residency in Indonesia. You can do a similar thing if you have residencies in other places. Some places work, some places don't, but it mostly works in most places. Super, super simple way to be able to spend your money. There's many, many versions of this. I just like having one that's in Telegram because it's one of the few places that I trust to remain free for a decent, with a bit of time. What was that, Esther? Telegram is Russian. It's not Chinese. That's why I love it, actually. At this point, I trust the Russians over pretty much anybody. I trust them to be Russian, at least. Which is not saying much. But, this is how the world goes. But it's Russian. And the thing is, like, there's no safe app anymore. There's no encryption. There's no, people use Signal because they think Signal is secure. Signal is Mossad. Like, WhatsApp is Meta. Telegram is Russia. Yeah, it's 100% transparent. Like, there's no privacy. There's no more security. Like, just do it all out in the open. If you're not doing anything wrong, like, do it all out in the open. Make your money in the open. Or how about this? Just don't make money. Figure out ways to structure yourself so you don't make any money. Some of us do that. Like, I'm a brokey, living a pretty good life. But there's all these ways you can spend your money. You can move it to different places. WeChat is Chinese. Also, I'll give you guys early news. FarmCent is creating a credit card that's going to be hooked up to not even just a super app anymore. There's a super phone in the works. ZTE, the founder of ZTE's son, has joined the mission. They're designing the phones as we speak. It's going to be a Solana phone style phone. It's also going to be a DApp system, an EVM DApp system, which you'll be able to put on any phone. And EVM doesn't have the Solana DApp store, which is funny. The phone is being designed. It's going to have LoRaWAN sensors inside so farmers can transmit stuff. We're making it for $120 retail for, stuff. I'm probably going to get a nice one. Probably like, whatever. but it's going to have a credit card built in, on ramps and off ramps built in, our stablecoin built in directly through the Indonesian government, through the IDR, so they can't block us, through government protection, and a credit card where we can spend money whenever we like. They will not stop us. Yeah. The next meeting is going to be at 9 o'clock Bali time. I'm going to be delirious as fuck. So, like, it's going to get way more retarded, way more hilarious. This is just 4 o'clock times. So, redeployment of your capital, putting it in different places. Through all of this chaos, making the money sounds easy. The most difficult part of this journey is going to be your psychology being maintained through this process. If little things happen that fuck with your head and you forget to execute the strategy, all of this doesn't matter. And when big things happen, if you still take your eyes off the prize, you're still fucked. This is core. Like, when shit goes down, and shit just went down for me and some of us, when shit goes down, that is the moment you got to keep your eyes on the prize. You got to calm down. You got to execute. You got to breathe. You got to stay on it in that moment. People are going to die. Countries are going to melt down. Shit is going to happen at levels which you can't imagine. This little corner around the road isn't just a pivot in the road. It is the biggest mind fuck that ever happens. You think shutting down the entire world was some big thing? That was cute. I think grocery stores without food was a big thing. That was cute. Wait until you see what's coming. I mean, look at what just happened. People are sitting in Dubai thinking they're rich and, blah, blah, blah. Well, are you going to execute? Right? So your psychology, staying level-headed and meditating through the process is going to be the name of the game. Because if you start losing sleep and you start getting fucked up and you take your eyes off the prize, you're not going to execute, right? And then this is why I'm this ruthless, like in the jungle, as focused as I possibly can be in a village that I know. And, when this place floods, I got a generator. I got this. I got fucking hydropower coming in. I'm like mitigating so many different risks. And I know when shit goes down, I execute. I've gone through the worst things in my life. I've always executed because I'm a ninja, right? That comes with experience. So you're going to need to deal with this chaos and execute. And that is where you need the help, right? Get some help. Like, especially men, we have this thing about like everything we have, we carry around and we act like it doesn't exist. We don't want to talk about it. We're just, I got this. No, you don't fucking got this, bro. Like, you're not even here. You're not even functioning. Like, I look into your eyes, you're not there, right? So get help. Speak to people, trusted people around you. Have a community of people. That's why it's so good having all of our people the way that we do, because there's this support circle, support structure where we can actually talk about stuff and understand, okay, well, is everybody feeling this? Okay, so like, what are you doing? What are you doing? Oh, I feel like this. Okay, like, I get messages all the time from people and they're freaking out. And I'm like, that's like, it's one of my favorite things to do, to show up for people at a time when they're freaking out, because I'm like, I know what it means to them to hear the words from me. Do that for people around you, or ask for that around you. Having community around you of people you can rely on, especially when the shit hits the fan, is the name of the game. If you're alone by yourself, you ain't making shit, in this whole process. But that psychology, mindfuckery process is how they get you, right? That's why, for me, community is the resilience. Community is everything to me, because I'm like, having the people around me that become stronger when the shit hits the fan, I love that. And I become stronger when the shit hits the fan for them, right? That's the name of the game. That, like, when grocery stores shut down, doesn't matter, we have our food. When power pumps shut off somewhere, doesn't matter, ours is gravity fed from springs. When I have some health issue, I have my family there and people there who are taking care of me. When they have something, I'm there. When we have something happening in the community, the whole community comes together. When we have, it's like, it's just, people showing up for people, and God showing up for you, right? Though that anti-fragility, which is to become stronger during times of stress, not weaker during times of stress, is the core of what's going to get us through this thing. And actually, that is the thing that attracts the right people to us as well, because once those people show up, then it's the dynamo starts, and the energy attracts energy, and over time you just become just stronger and stronger through the process, because you're no longer a stick, you're a bundle of sticks. Now, through that process, a core skill to learn is to cut out the wrong people out of your life. Like, there's so many nice, sweet people that are in this community, and if you're just nice, if you're so nice that the wrong people take advantage of you, then you're doing it wrong. It's not about being nice. Kindness isn't a quality upon itself. Kindness, when you are capable of cutting the person off, or at least being dangerous enough to have your boundaries and protect yourself, is when it really matters. So learning how to cut the wrong people out of your life, and being ruthless about cutting them out of your life. Like, it took me a long time to learn the skill, but I'm very curated and careful around who I keep around me. That's why you'll see, like, I mostly don't take shit from people. When I want to say something to somebody, I say it, because a lot of times if people are fucking with me, I'm like, fuck you, fuck off. No, right? So learning how to cut the wrong people out of your life is really important. And a lot of times it's like, it's not that the person's a bad person. It's just the energy, the way that it interacts, and the way that it's causing you to be in your life. You got to cut them out, Don't feel bad about that, or at least be open to that idea. Because a lot of times the people around us are the ones who are actually keeping us down, and there's a bunch of toxic, manipulated people who are going to, show up, especially when you become abundant. One of the biggest things that happens, one of the biggest problems with making money and getting rich and just having anything, is that people will show up who will want it from you, and they want to take it from your nice ass, and then they will do everything to take it from you. So be very careful about takers. Keep givers around you. Build circles of givers around you. Now, shit is going to go down. Shit is going down today, right? It's only going to get crazier and crazier and crazier. Are you going to become stronger? Are we going to become stronger? Or are we going to become weaker? I know which way we're going to go, right? When the shit hits the fan, we turn the fan off. Like, I have the remote, right? It's like, that's the whole point. And if anything, this is where the strategy that we built now, the strategy is built to benefit from this chaos. It needs the chaos to happen for us to benefit. The emotional side of me used to be like, I kind of feel bad about that. The investor in me is like, I'm just investing. Okay, I'm just clicking buttons. When shit gets crazy, the buttons become easier to click. And, at the same time, the strategy is built to protect against all the shit happening. So that is what we're talking about. Hopefully that was valuable. Hopefully I will remember to put the links into the description if I'm still lucid by the end of this thing. Now, let's take some minutes to look at the holy markets and analyze what's been going on. First of all, before we do that, let's just take some questions. Anybody have any questions? Anybody want to step on stage and ask some questions? Good question. When moon? Sometime. One of these days. When moon? Yeah. Come on, somebody's got a question. Here's the other thing. Fucking speak your mind. Like, in this world,
Hey, bro.
people are too scared. What's up, bro? Yeah, there we go.
Hey, man.
Somebody
Yeah.
actually speaks his mind. What's up?
Hey, everyone. I don't have a question. I just want to tell you that this is the best motherfucking call I ever participated with. The most informative, amazing, man. Really. From A to Z, you covered everything so far. You know what? Everybody's really interested. So I just want to say thank you. Amazing. Really.
Thank you, brother. Thank you for listening. It means the world coming from you. You're a very tuned in person. And yeah, this is the kind of stuff nobody's teaching and telling. That's why I was like, okay, we got to not just show people which coins to buy. What's the bigger picture? How do we see it? Fantastic. Thank you for that. I appreciate the kind words. Okay, so now what's going on in the markets? Where are we going? Let's take a look. We have exactly the scenario that I was thinking playing out. You know, everybody's thinking Bitcoin's breaking out and it's going to go like this. By the way, this is one of my favorite things about like chartists. You know, I love Gareth, but Gareth's line was like this first. Okay, his line was like this. It was like, oh hey, look, the line's like that, and then it, you know, it kind of bounced around and it didn't work. So he was like, oh no, what about this line? You know, if it doesn't work, you just move the line. Like, I love that. So now we move the line, guys. Gareth move the line. This goes to show none of us know anything about fucking anything. We're just drawing lines and angles and moving them around to fit our stories. But, you know, it's a historical, like my experience in this thing has been that, yeah, it kind of goes down, bounces around in a certain zone. It looks like it's leaving. And then, you know, it like, oh, you guys can see this now. Okay, that's good. It looks like it's leaving. And then it kind of pulls back. And then it goes, no, I'm going to leave without you. And everybody goes, oh, here we go. Oh, it broke out. And then boom. Right? And it's doing the same thing now. Oh, look, I'm boring zone, nothing going on. Oh, I'm going to leave. And it's like, oh, shit. And it's like, no, I'm not. Oh, my God. Okay. I'm going to leave again. And they're like, oh, my God. And then boom. You know? Now, it could just go up. And then now, who cares? Like, worrying about it between 73 and 80. Like, does it go here? Does it go there? Like, that's not the time scale that I look at. But my historical kind of experience has been that it fakes people out, goes up, and then turns around and falls off of a cliff. At some point, it should fall off of a cliff. It has already made this flag, which then led to this crash. And now this flag, this well-drawn flag, should lead to another biblical crash, right? Because a biblical crash is required to scare the shit out of people. People still have hope. People still have faith. Many people are still holding. And that is not how... That's not the psychological destruction that they like to leave behind in these things. And that's now how they get people to quit this thing, right? Another the kind of risk that I realized is Bitcoin doesn't have to go to $8,000 for MicroStrategy to liquidate. Strategy just has to go down to the level that it needs to go to without Bitcoin going there, right? They're not... It's not guaranteed that they move at the same time. So there's still a big risk that these digital asset treasuries have a big meltdown, and that's in the cards. Now, here's the volatility update. Bond volatility is putting in some numbers. Like, remember we said the ocean, right? Bonds are the ocean. Imagine the ocean making a move like this, right? Imagine the ocean. Imagine you're looking at the ocean and you just saw a big old, like, peak get made in the ocean's flat, and you just see a big peak get made in it, like far out in the ocean. What do you think is going to happen to you on the beach? Right? Because when the ocean does that, that means something just dropped in the ocean. And when it goes, and then it, you know, you get the idea. So that's what the ocean is doing. This is what the ocean did back here in April. This was the Trump crash. Okay. When the ocean went boom, boom, that was the Trump crash. This was what the ocean did back here in the yen panic katana catch that we did. Okay. This was the katana catch of yen panic. This was Trump crash. This is what it's doing now. So this was a crash. This was a crash. What do you think this is? Maybe not a crash. Who knows? Maybe everything's different. Volatility, like I was saying before, has now hit levels that are concerning. This was 1010. That was an artificial crypto crash, but this was, Trump. This was yen panic. We've kind of done this. Maybe it just goes down from here. Who knows? But everything else is signaling that there's still a lot more craziness to come. This is just another way to look at it. This is another way to look at the same thing from another angle. They're all kind of telling the same story. All the U.S. volatility, but mainly the bond volatility move is something that's a big signal, right? When bonds make a big move like this, that's scary. And of course, everything is happening because of our good friend oil. And oil has done this, and is doing this now, as you can see here, right? Look at that. Oil has done that, and it's probably going to do this, and then chop around, and then something like that. You know, I wouldn't be surprised if that's what happens. But oil doing this has freaked out everybody in the hood. China went panic-ish mode. It's not panic-e mode, it's panic-ish mode, because this was yen panic, this was Trump crash, this is halfway there. It doing this is in the cards. Japan went panic mode. This is Trump crash, that's yen panic, and it's done. Basically the same move. Now, Japan could definitely pull an even higher move, because what's coming now should be bigger than the yen panic and the Trump crash, because those were blips on the radar, right? Like looking at what it did to crypto, those were this was, yen panic. This was Trump crash. This is what's already happened, right? Yeah, I overdrew that. You know how it is. Got to exaggerate a little bit. But this is what's already happened. It's way bigger than the Trump crash. It's way bigger than the yen panic, which was like right here, right? And this is foretelling that something big is coming in the markets, because Bitcoin is a fortune teller. It's like Alibaba. This is what is this? Korea, yen panic, Trump crash. Yeah, yeah. I'm sure everything's fine. That looks like, yeah, shit's fucked. India? No. Yen panic. Let's zoom this in a little bit, guy. This is yen panic. Trump crash. Well, Trump crash technically. And yeah, shit's fucked. So all the global markets are signaling that things are crazy, or as I technically say, shit is fucked. This is Germany. Trump crash. Thank you, Shelly, for your time. It was great having you here. Trump crash. Things look fucked. So not much has changed from that update that I did before. Now we're just progressing towards that process. Now, volatility on Bitcoin has found, and again, I moved this line. This line was like right here, and then it didn't work. So I was like, let's just move the line again. Magic fortune telling. Yeah. So volatility is pulling back. It's going to have a pop at some point. Whenever it has a pop, let's see what it does. Is that the Katana catch? Let's see. Things are lining up to say that it should be. But the thing with stuff like this is that, Rajiv, thank you for being here. Appreciate you. See you next time. Thank you, sir. The way it's looking like in the stock market, this could take some time to play out, right? These things don't just happen overnight. Like now we're having this for it to kind of bounce around and then have another bounce, and then go down here. Something like that is a normal. But the kind of volatility that we've just had in the world, for this to be like this, and then boom. No, I'm just kidding. Okay, that was super exaggerated. It's like this to go back to like here-ish, something like that range is very much in the cards. So that's not too far away. We're at 66. It goes into 61 on the S&P 500. Expect that move to happen pretty quick. I just contradicted myself, but you get it. Like, it's like it might go in waves, but it should also, volatility says it should be pretty quick as well. Semiconductors are topping out. NASDAQ is topping out. It's now bouncing around in a certain range. It is making that kind of flaggish pattern that we all love, which means the next move should be something like that. It going all the way down to here, right? So like this range, somewhere around there, well drawn, is not out of the question. There's already negative divergences on this indicator, which is, a combination, a bunch of indicators. So all the things are lined up for stuff to fall off of a cliff. Look at this. High risk junk bonds already falling off of a cliff. This is a pretty good signal that this is like private credit, all that stuff is melting down. Private credit's not having a good day. BlackRock is not having a good day. You know, they're called like Vanta BlackRock now, because the bank run on private credit is happening and they're not able to give the money back. China already starting to make a bit of a top, but still still strong enough, still barely holding on. Korea has made a big move. It doesn't look that big, but it's made a big move. Flag pattern, big move coming up. Japan topped out, as I told you. That was the candle, topped out. Oil is probably going to do a similar thing where it had like a big old candle here, then it goes up to a certain range, and then it kind of dumps off. We're seeing that happen in all the assets. But Japan, same thing. It's topping. It's made a signal of top. India, Jesus Christ. Oh my Lord. Alhamdulillah, Jesus. Yeah. That's a move. India is very dependent on oil. India is actually the only country whose oil is being allowed to go through the straits of Hormuz. But India is clearly making a move. It's already fallen. It's already fallen a lot. Who cares about the numbers? You get the idea. Euro stocks, pretty big move. Making that pattern again. Further fall down in the cards. Germany, pretty decent move. Not really a pattern, but it's probably getting there. UK, pretty decent move. These things look tiny, but these kind of like huge reversal moves coming in usually signal something. It doesn't just end overnight. Japanese bond markets, not much signal there. So everything is pointing towards the downside. Oil continuing to do this is putting more and more pain into the markets. Our index, the Excellency Index, has not broken out. This is XRP, ETH, Solana, and Doge, has not broken out. It keeps going and bouncing around a certain range and faking people out. I wouldn't be surprised if it breaks out and goes up here for a second. I'm not waiting for that. I had a little tiny bit of XRP left, just in my like personal side bag, and I liquidated it already here. Liquidated it like basically here at this price. Happy to get out of it at this point. Now, a pre-signal that's been very interesting is this one. World Liberty Financial. I've already spoken about this, but Wolfie as we lovingly call it, this is Trump's coin. It's a pre-signal to what's about to happen in crypto. Well, you can't see this. Does the rest of you guys see this? Wolfie? Okay. Yeah. So it's like, this is Wolfie. This is the range. It's kind of fighting around that range. It went and broke down below. So I wouldn't be surprised if it goes downwards, which then signals that crypto probably goes downwards as well. So all things considered, things are looking pretty bad. I mean, good for us. Looking pretty bad for people who are hoping that it goes up. So we just wait and see. Bitcoin usually does kind of fake people out and go a little bit up here to like convince people that it's going to run and FOMO people in before it falls. Not out of the question. But everything is now lined up for a Katana catch. We are ready. Katana catch is now set at a XRP price of 0.66666. It's not on this one. 0.6666666. I'm just kidding. There's 4 sixes. It would be put there. And that's the auto Katana catch, right? That's the other thing with Katana catch. It's like I used to manually catch them because Spirit would always put me in front of a computer, and I'm sure she'll put me in front of a computer again because I live in front of a computer as well. But this is the auto Katana catch, that in case I'm sleeping, in case it happens when none of us are watching, it's math is also on the other side of the world, close enough, kind of we're tag teaming shifts. But if it goes down and hits this, it auto triggers everything to buy. If I'm awake and things go down and I see something happening and it only wants to go down to there or something, I'm happy to catch it there. But I like to set it so low that like if I caught it at 6666, also the devil's number. If the devil's attacking, then let's just catch it at the devil's number. I'm happy to pick it up at those prices. If it goes lower than that, it's gonna bounce back in a second. The point isn't to catch the very bottom. So there we go. That's the update for today. Any final questions before we close this thing off with the rest of that song? Going once. Going twice. Sold to Anna. I love it. I mean, oh, we got it.
Hi, Sim.
Hello, lovely.
Hi,
How you doing?
sweetheart. Very well. That was wonderful. Thank you so much.
Thank you. Thank you for being here. It's the best doing it for you.
Always a pleasure. Bless you.
Thanks. We got. Could you go through the on-chain charts that you keep track of? There's not much to look at on the on-chain stuff. It's just psychology. I mean, psychology we could look at, but psychology is in the gutter. You know, psychology is it's best to look at when we actually get closer to the catch. Right now, it's kind of bouncing around in the same zone. Like last time we checked it, we were right here, and now we're right there. So it's like if anything, it's actually a little bit better right now. But let's answer this practical question, and then I can do the on-chain. Sure. I have a practical question that came up while you were explaining the Bali exit idea. For young families, it makes a lot of sense to build a house and create their own base. My reality is a little different. I'm single, and the idea of building and managing a whole property in the jungle feels like a lot of responsibility. Yeah. Have you also considered a model where a beautiful house is shared by several individuals? Something like private suites with shared living spaces so people can have their own space while still being part of a community. I think this could be very attractive for single entrepreneurs and investors who want to base in Bali without building an entire property themselves. Yes. So the bigger vision is to have these communities where it's like a health resort where we have the best, you know, we have everything. We have med beds and we have saunas and everything with like meditation areas. There's like places like we don't need to own it, right? One of the secrets of this process is if you own things, it's a problem, right? So in that model, we wouldn't own it. We would have a tokenized access to it, you know, for lack of a better word. It's like timeshare without the scamminess. It's just like, you know, somebody puts in 10 grand, gets 10 grand of usage. Somebody puts in $1 million, gets $1 million of usage. Maybe they don't use their million and they let their $1 million of usage get rented out. Other people take that excess capacity, use it while they're not there, and they get paid from that amount being rented out, right? So many people are asking the same question. So the way that I'm seeing it is that we have so many people that are like, look, just build the house. I don't even want to live there unless they blow up my country and I need a place to go, and then my family needs to come there right away, right? So then the question to them is going to be, okay, well, we can build it for you. Would you like to be part of a pot, or would you like to own it? Some people are like, I'd like to own it, but I'm happy to rent it out to trusted people who are not going to, you know, destroy it, or I don't want to Airbnb it or whatever. So it would be like, we have these places. We already have these places, right? And you come here, you're like, look, I'm here for 6 months. I'm going to be back, you know, home for 6 months. I need a place for 6 months. What do we got? Do we have one in Uluwatu? Do we have one in up north? Maybe I want to kind of bounce around. Maybe I want to spend a month here and a month there and a month there. And we just have places around that are, there's this kind of home sharing setup, right? Where we all contribute into a pot and there's different places. Then there's this idea of communities being built. That's going to be a bigger vision. That one, I think, like around 2028, when everybody makes big exits, when we have hundreds of millions of dollars to deploy, is when it's going to come due. And that's also when they really burn down the world. And many of us come together and are like, look, let's have 30 of us come together and, you know, fund this kind of bigger thing. That is going to happen as well. Right now, this 15-hectare piece of land is effectively that, with kind of a private setup, which is like there's 100 units built by people however they want. There's existing kind of models built for the land, and people pick the units. They build them. Some are rented, some are not. Some are in a pot for us to use, some are not. Just kind of all together. And then there's, you know, common areas. We'll build some yoga shalas. I'm building a sound dome for us to do sound healing in the area. So it'll be like, hey, let's go to Sim's place and do sound dome stuff. I'm still going to live in this little $30,000 house. I don't want to live anywhere else. But, you know, it's going to be there. It's like 15 minutes away. But, you know, you guys want to go live there, go live there. You want to use a sound dome, use a sound dome. We're having some fire circles. let's go hang out. Everybody comes together. We do some marshmallows, or whatever we want to do, and then you don't have to have the burden of ownership as part of that, right? Construction engineer, project manager, yes, happy to take the help, Gabriel, but like, it's Bali, bro. It's a whole different ball game. Like, when you come here first. Come take a look at how construction happens here. There's a reason why they can build for like $250,000 when everywhere else is like, $1.5 million to do the same thing. But you're happy to help, happy to take the help. You just got to move here first. That's it. So yeah, there's going to be many different pots, right? What's the meaning of life? Meaning of life is simple. The meaning of life is really simple. It's not that complicated. Life does not have an innate meaning built into it. Meaning is something that we prescribe to life. We give life meaning. It doesn't have meaning built in. And the meaning that we give life depends on the lens that we look at it through. So I, after enough journeys to the cosmos, have just adopted the perspective that life is perfect. I look through the lens that everything is perfect. And because it's perfect, the meaning of life is that it's perfect, right? Other than that, it's meaningless. It doesn't have meaning. Then the question is, why are we alive? To be, to live. Just be, whatever that means. Most people aren't even being. We're human beings, and we've become human doings. And just to be the best you that you can be is like my favorite way of being. I'm like, let me just play this game in a way where I can optimize myself. Like right now, I'm trying to do pull-ups. So I'm like, let me just get better at doing pull-ups. I have a pull-up bar, right? Let me get better at teaching. Let me get better at sharing and caring, all that stuff. Is there a chart to track it? Yeah, you. The chart is you. I just look at your face, look at your smiles. If you're happy, great. If you're sad, perfect. C'est la vie. That's life. All right, let's look at the on-chain because that is a good idea. So we go to Glassnode. Hey, what's funny? You know what the meaning of my life is? My life is very simple. I wake up, I stare at the sun, I sit in the sun for a bit, I go do some pull-ups, and I just sit. I close my eyes and I just sit here. I just listen to this nature. I don't know if you can hear it, but it's like I just listen to the birds and the bugs and the crickets and the cicadas. And I realize that's all life is. Life is just the little moments of just a little completely mind-blowing moments. Those mind-blowing moments are actually like a drug that we chase. And the more we chase it, the more it doesn't feel good, like any drug. But life is lived in the now. It's like, what does the now feel like now? And how good are we at, enjoying the now the way that it is? And if the average of now feels good, great. If the average of now doesn't feel good, that means change something. Because what we are not changing, we are accepting. And then to whine about why life is the way that it is, when we're not changing it, it's kind of illogical. Like, there's nobody living life for us. We're the ones living life for ourselves, right? Got a problem, fix it. If you ain't fixing it, love the problem. It's perfect. Somebody asked, what's his name? One of the really witty Jimmy Carr. They asked Jimmy Carr, like, what's a stupid thing that wealthy people know that poor people don't? No, wealthy people understand that poor people don't. And he was just like, well, I don't understand that. Well, that's a weird question, And then he was like, well, actually, here's one thing. They understand that problems are a feature, not a bug. Problems aren't things to be fixed. They're opportunities to improve. That, when we're going through life and we think, oh, there's problems, I just wish there wouldn't be problems. You know, like billionaires wish they have problems. As a matter of fact, they have the biggest problems to the point of having mental problems, right? So understanding that the problems are kind of the point of this thing, and the joy that we take in solving the problems, that's about it. And in between, there's a little bit of, fun time for us to giggle a little bit, but the rest of it's all problems. And there's nothing wrong with that. So, with that sermon, let's look at the psychology. We got long-term Nupal. We got short-term Nupal. Okay. So the psychology of the Bitcoin holders is getting nice and scared. That's really nice. Like, people are getting anxious right now. And why is it showing up like that? Oh, this is the price. Okay, so like we're in the anxiety zone. I think we go down to the fear zone at least. Capitulation. Oh, wow. Okay. Yeah, so I mean, like, us getting down to that like below 50K zone is almost in the cards, because people are just on the whole. Wait, are you seeing this? No, you're not seeing that. There you go. Like, look at this. Now people are going into the anxiety stage for Bitcoin collectively. The fear stage here is around this zone, which is no.
We still can't see it, Sim. We can't see your screen.
You can't see this?
I can.
Okay.
See the screen. Yeah.
Phew. I was like, am I the only one seeing the screen? Am I hallucinating a screen? I took too much. I know it's weird like that. Like, sometimes it doesn't show you, because if you're watching it on a device, you have to like tap on the screen and maximize it. But I'm glad we can all see it. Right now, it's like collectively we are in the anxiety zone, and the prices going all the way down to this kind of 40K region. Yeah, like about 40K region is pretty much in the cards, because that is right around where we should hit the fear and kind of capitulation zone. So we're gonna capitulate. Like, capitulation is usually the finishing of this cycle. If we look at the short-term holders, I mean, they're short-term holders. They're always doing the exact same thing, always panicking. The sky is always falling. So for short-term holders, the sky is falling, yeah. They're in the red, which means capitulation, which means selling at a massive, massive loss. The, poor guys went up to optimism back in March of 2024, and they were made to pay for it. After that, just sat in fear the whole time, barely getting even any kind of profits, and have been, losing money all along the way. So these guys, they always lose money. But the long-term holders, who are usually the diamond hands, as they're called, are now in a state of fear. So the next stage is long-term holders going into a stage of capitulation and panic. And when long-term holders lose money, that's kind of the finishing of the cycle. So that still puts us below $50,000. Somewhere between 37, 35 to 50 looks to be a bottom. I'm also not going to wait for a bottom in this case, because these times have a sharp drop. I'm not sharing everything properly. There you go. This is long-term holders. Okay. Long-term holders are in a state of orange, which is fear, right? Long-term holders usually go into this red zone, which is capitulation, which means selling at a proper loss. Fear is still, just barely having a profit. Capitulation is properly taking a loss. That the long-term holders being in this kind of fear zone means that they probably, like us going down to at least this zone, which is where the capitulation zone starts, 50,000 is very much in the cards. That's when most of the long-term holders, a lot of the long-term holders, start to go into loss. Going all the way down to this $30,000 zone is not out of the question, because if it goes back to 30K, people will give up like nobody's business, right? So that is what's in the cards. The kind of sharp, violent nature of the drop that's happened, or the volatility pop that's happened, what's happened in gold, what's happened in silver, what's happened in oil, what's happening in global markets. When it happens in Bitcoin, it's even sharper. It's even worse, right? And around that price, the companies start to liquidate and everybody starts to panic sell. Now, our kind of better signal to look at for the altcoins is the Solana psychology, right? So this is Solana. You want a Solana? Scale. Linear. This is Solana. You know, it's like, it's easy to look at everything in log and just kind of it messes with the numbers. This is what's happened to Solana. It's pumped and is dumped, right? But in log, it's easier to look at the metric itself. So why is it showing up like that? Okay, so Solana, which is a representation of altcoins, is like that. Okay, Solana long-term holders are already taking massive losses. They've been taking losses for some time. So Solana going down to this like 30-ish range is not out of the question. 30 to 50, somewhere around there, simply because of the ranges that existed before in the past. If we go back a decent bit, 30 to 50, this kind of ish range is in the cards for Solana. But Solana going all the way down to 20 is, again, not out of the question. But Solana at $20 would be wow. Would be a discount and a half, because Solana was at $261 not that long ago, and Solana's topped out much, much higher than that. It's been at 260 basically. So it's like, it was at $260 not that long ago, and you get it for $20. You get a 90% discount on it, and then it runs up on the other side. Those are the kind of things that we wait for, right? In cash. But long-term holders being like this is a huge signal. That's telling you, okay, the market is feeling proper pain. And just for your enjoyment, here are the short-term holders who are just, losing all their life savings constantly, losing more and more and more and more, and capitulating more. Just all in all, losing money constantly. But the long-term holders are a better signal for it. So, okay, altcoins done. Bitcoin getting there, about to really, really panic people very soon. Looking at the spread of the kind of holders that are in the market and who's coming and who's leaving, the shorter term guys are all starting to taper off. These like darker colors at the bottom, you can see like, purples are 10 years, the blues are 3, 4, 5 years, greens, the yellows are shorter, the reds and oranges are like super short term. So looking at that, we are seeing a massive drop off in the really short term guys and girls. And they're all starting to taper off. These lines starting to go down means less and less of them are holding. Now, the longer term guys, they're mostly just tapering off. It's mostly going into the very long term hands, the people who are actually holding long term. But even many of them are going to start to taper off when this happens. So that's usually the kind of finishing off of the process. Like this was a Trump crash. You can see that, right? In the Trump crash, you saw the downward waves of all the really short term people, and it finished off by the time they kind of bottomed out, right? Now, what you saw at the same time was the longer term people were increasing their holdings in supply. Now this is starting to go down. Where it bottoms out, we don't really know, but sometime soon there should be a bottom. There's some data that says that, it could be closer to, there's a big crash that should happen closer to the end of the year. But between now and then should be a nice, huge run up that we capitalize on. So let's see how that plays out. So that's the holder supply perspective. Then if we look at the where was the other one? Oh yeah, the leverage metric ratio. This is the main one to look at for. Is there a lot of leverage in the system? Is there little leverage in the system? The leverage is mostly flushed out. You know, it could drop a little bit further, but this isn't going to be a leverage-based crash. This is likely to be a spot crash, which just means that like all those Fugazi casino bets that people make that normally crash the markets doesn't seem like that's going to be the reason to do it. It seems like this is going to be a crash based on actual selling of actual crypto and companies selling it and stock market crashing and all the kind of fundamentals that bring the actual market down. So there isn't a bunch of leverage risk in the markets that way. And then, is it cheap? Yes. Is it stupid cheap? No. Like this green zone is stupid cheap. Is like too cheap. So cheap that I can't think of a joke. This red zone is way too expensive. This is what a bull run looks like, right? Going all the way up there. Like if you look at even previous bull runs, we get all the way up to this red zone, and that's when we know, okay, this is a proper bull run. Full-on mania. That's why when people are saying this was a bull run, no. Money printing hadn't started. Nothing had started, so that's not a bull run. But is it cheap right now? Yeah, it's cheap. If somebody bought it right now, I wouldn't knock them. I think we're going to go down to this zone. So that puts us, I mean, pricing on this one's a little bit difficult to pull up. But even down to this 50 to 30 zone, we would drop down here, and that would make it so that things get really cheap. Now, money printing is something that we're following closely. And money printing is finally happening, at least on this chart. Finally, this line is starting to curve upwards. You know, if we do this with the line, you can start to see this line is finally starting to curve upwards. This is $200 billion to put onto their balance sheet. That's what 200 billion gets you these days. A little blip, a pimple. They're continuing to go upwards. So the money printing is from the Fed side is starting to already happen. The liquidity kind of waves. This is what I posted in the group. This is the best perspective we have as far as liquidity and how it lines up. Michael Howell's perspective, which was where are we at? Okay. This perspective, right? So this is the bigger, broader kind of liquidity cycle that we're looking at. This was the previous bull run, and this is how Bitcoin lines up with it. There are times when this line's going down and Bitcoin's going up, right? And there are times when this line's going up and Bitcoin's going down. So it's not a perfect synchronicity, but it is the broader kind of, it's the best reflection of liquidity that we have with the holistic global liquidity that we can see. We've already had this kind of pump and crash. Bitcoin's had its pump and crash. I think as this starts to pick up, Bitcoin should start to pick up as well. There's a pretty big chance that Bitcoin doesn't go up to those 350, 700K range. It might just top out again around 150. That's a perspective that I'm looking at. That's also why I think Bitcoin's going to run out. Everybody's now going to move into Bitcoin thinking it's the safe place to go because that's what's historically happened. It runs back up to 150. Everybody goes, see, we're all getting rich. The altcoins run off. It goes and tops out again. Everybody misses it again. Everybody always misses it, right? So it's going to be 150. Boom, we turn around again, right? So I think that is a very high likelihood perspective where the liquidity pumps. Bitcoin goes off on another run. According to his perspective, this liquidity cycle is ending, right? But also, like, there are times when Bitcoin has gone all the way, the cycle ends here, but Bitcoin runs into an insane run up until a little bit later. I think that's what's playing out. And I also think this kind of a choppy liquidity situation is what we're in right now. That's why we're having this kind of chop. So all in all, things are lined up really well. There should be a nice little crash coming up. If it isn't, we buy it and we get in. If there it is, we buy the shit out of it and we get in and we go. Regardless, we've skipped a lot of the bloodbath. And on the other side is a lot of good stuff. So did you say previously that gold Bitcoin has a lag? Yeah. So like gold, let's look at gold. See, these are really good questions because there's a lot of people out there that are going to benefit from these questions. And I haven't looked at gold offset for a decent bit of time. Thank you for the reminder. So this is gold and Bitcoin offset, right? There's this massive divergence that's happening, but this is the history of Bitcoin and gold. Okay? Like that. Close enough. There are divergences that happen, but they're pretty aligned. No, Bitcoin's not going to $5 million, right? This is like it's a relative kind of perspective. But gold has now signaled that Bitcoin should go crazy. There is a delay. Average delay is 9 months, so I put it at 276 days. Minimum delay is 6 months. Maximum delay in history has been 12 months. In the current times, delay could be whatever they feel like, right? So there is a kind of a lead lag situation. But now the way things have gone over the last little while, this bifurcation has to snap closed at some point, right? If I had to put it like in a number that I would want to listen to, it would be something like, I don't know, something like that. Bitcoin around $350,000 max by that time. But I also think the same way Bitcoin has been manipulated on the downside, it's going to be manipulated on the upside as well. That on the downside, nobody expected it to be here at this time. I think the same thing on the upside. Nobody's going to expect that it tops out around 150. That would be the most kind of unexpected scenario. But regardless, this says by end of 2026, we are in Valhalla. And gold is actually the most accurate reflection. Now, oil is signaling that we should have a massive crash by the end of 2026. And it's always going to feel like a massive crash. Remember, we talked about that. It's always like massive pump, massive crash, massive pump, massive crash. So by the end of 2026, we should have another massive crash. As a matter of fact, according to this data, we should have a massive crash here around July. Then we should have a massive crash here around November, right? Obviously with pinches of salt on either side. But that's what we're here to catch. The pumps and then the dumps, and the pumps and then the dumps. Gold is probably gonna come back down. Gold going down to like $4,000 is not out of the question. But gold at $10,000 by a couple of years down the road, gold at $20,000 by 2032. No, well before 2032. Like gold at $20,000 by end of 2028 is not out of the question, right? Which is like, what picture does that paint for crypto going forward? But yes, to answer your question, the delay is that. I guess now that we're here, might as well look at the Fibonacci perspective on it. Where's Bitcoin now? Bitcoin is in the lower fib. Lowest part of the fib right now is at 42. Takes us right down to that 37, 42 range. In the crashes, it has a history of hitting the very bottom of the fib. At the bottom of the bear market, it has a history of going even lower. So again, another piece of confluence saying that things should go down lower. And before you ask, yes. Okay, MicroStrategy doesn't even really show up on the data. Okay, no, it has enough history to look at. This is MicroStrategy's history. It should crash well below this range because I think this is one of the biggest risks in crypto is strategy doing something funky. Ethereum is cheap already. It probably goes well below 1,400. But that 1,400, 1,500 range is a nice little bottom for it to put in. But right now, I think like even down to this $1,000 range is not out of the question according to this. XRP, where's the bottom of that range? Right now, 86 cents. I wouldn't be surprised if we go between 86 cents and 66 cents, maybe even a little bit lower. But again, you can see the fibs yourself. All the numbers are on this side. You can pause and look at it yourself. Now, 66 cents and the top of the fib is at 16. And like I said last time, it goes to 22, 25, 27, 30 at the top. So that's the kind of growth we're looking at projecting forward. Solana, what the hell happened on Solana here? See Binance. You see the kind of bullshit I'm talking about? Look at this. Look at this. This is Binance. Okay. Look at this. This is one candle on Binance. It's a little difficult to see. Let's go hourly. Okay. Jesus, it doesn't even show up on hourly properly. This is a candle, ladies and gentlemen. An hourly candle on Binance. For some reason, by magic, in one day, Solana went from $88 to $190, $185 on Binance exclusively. Like, this is the kind of fuckery that they do, right? Like, you make some bets, you set some orders thinking, oh, yeah, I'm going to be a smart investor and blah, blah, blah. And they manipulate the game and they dump on you and take all your money. So, like, this is the kind of stupid shit that they do. But Solana, through the perspective we were looking at, is already in the cheap range, but it's going to break well below the fib. It also has a history of breaking well below the fibs. It's also a newer coin, so, like, you know, the fibs need a lot more data. The more data there is, the more accurate they are, although this is enough data. But it breaking below down to these 30, 36 ranges, not out of the question. Doggy coin, as it's lovingly called, is already at the bottom of the fibs. The pattern has also shown that it doesn't have the same kind of crashy pattern, but it's still going down to this 5 cent range, which is another 50% lower, is not out of the question. So there we go. That's the perspective we're taking. Have you set an illogically low Katana catch for Solana? The thing is, I don't set the Katana catches on each asset. Like, the thing with Katanas is they're momentary things that happen at the same time, right? So for me to set a Katana price on Solana, there isn't a clear enough, the levels are not as clear, right? So it's like, let me go Solana. And plus, I don't know Solana as well as I know XRP. That's the important part. Like, if I had to set a Katana on Solana, I would set it between $26 and like this $45 range. You know, Solana at $45 is ridiculous. That's a safe bet. $45. The kind of ridiculously low price would be like $25, somewhere around there. I would set it there. But I have it set on XRP because we're buying all three of them at the same time, and the sharp movement happens at the same time. On XRP, the signal's even clearer. The levels are very clear. You know, even the fib levels are very clear. It follows them very cleanly. It taps things perfectly. It makes these clear patterns, you know, levels here. If I had to set it illogically low, I'd go down. If I was a greedy person, I'd go down to 45, but I'm not a greedy person. I'm happy to catch it at 66. Yeah, so it's just easier for me to set it there. And then when it triggers, it buys everything on the other side as well. So BTC USDT chart on normal scale. It's very interesting for calling the bottom 2018, COVID and da-da-da. Interesting. Bitcoin and USDT dominance. Never seen that before. T.D. It just looks like the Bitcoin chart. What am I looking at here? How is this any different from the other chart? I guess. Okay, yeah. It exaggerates the moves. Okay. Yeah. Okay. I see what you're talking about. Interesting. Yeah. All right, let's try this one. You're like, what, Sim? What? Don't just interesting yourself. Tell me what you're talking about. Okay. So it's like this kind of normalizes the chart and makes it a range, that it ranges in a certain zone, right? So, like, if you had to look at where is this. Where the fuck? Over here. So it's like this zone ends up being like a bottoming zone, let's say right there, right? When it enters that zone, that tends to be the bottom with pretty good cadence. So once it goes back and enters that zone again, that says a lot. Now, one thing with USDT dominance now is that USDC is becoming more dominant than USDT. So what happens when we actually add USDC on there as well? Okay, so the data's later, but this paints an even higher picture. Okay, well, I'm going to watch both of these anyway. This is the kind of data we're talking about. Yeah, it's on normal scale. Oh, no, this is... Okay. Ah, there we go. Now we're talking. Okay. All right, so first of all, first thing to do with gold like this is to actually put it on your chart, your watch list. Okay, so I'm going to put that. Then I'm going to put just the original with Tether, which has older data. Okay, so this is on normal chart. All right, and now let's add some boxes. So it's like, let's say this is the range for the bottom, just to give it a nice little range. And then with, okay, this is with Tether, but just to look at it from that.
Yeah, hello, Sam. Hi.
Hello. Wait,
How's
let me
everything?
turn on some lights, bro. 1 second. This is like hurting my eyes. 1 second.
Yes.
Okay. How you doing, bro? What are
I'm
we looking
doing good. Oh, yeah. How's everything?
at? Life is
Yes,
life.
this chart is very interesting. I just found out about it recently, and I've been researching it. It called the bottom in 2018 in COVID and 2022, and even the tops, the 107 top and the 126 top are at the same range. Even the 2024 top in March, if it was also at the same range as the previous tops. See there, if you go to the left, yeah, exactly, and you see the bear flag in 2022.
Yeah,
Go
right
in
here,
2022. Yeah, exactly. That is where the level it bounced from now, and it's repeating that same pattern. Exactly.
Okay.
Look at it now, and it's at the same level. Exactly. So that's also a clear indication.
So you're saying like this level, and then now it's basically down to this level.
Exactly. If you draw a line on the bottoms of those level, it's bounced exactly from there.
Wow.
Yeah. And when I add the DeMark on top of it, it paints even much better picture than just the chart by itself. So I strongly believe that we're exactly repeating the same pattern there, and it might have that final dump. And this being calling the bottom like very accurately in pre-bear markets, let's say, even
This
COVID.
is great.
Yeah.
This is the kind of perspective to take, because then it gives us ranges to be like, okay, where is it in that range? Like this is this. So what do you think about like having USDC in there as well? Because now circle dominance is starting to beat tether dominance. So it's like
Absolutely. I've been also looking at that, and it's been also painting almost the same picture. So we can look at both individually, like the tether dominance and the one adding the USDC dominance is also the same range there. And of
Yeah.
course, then adding the RSI, adding the MACD, adding the DeMark, and looking at the on-chain metrics, maybe even higher time frame, you put it on the monthly, it gives you even a clearer picture, so you can see
Right.
it. Yeah. It's just playing around with the chart and having a better perspective.
This is great, bro. This is gold, because this normalizes the data in a way so that you're not having to look at the log curve the whole time, right?
Exactly. And the tether dominance chart by itself, it's repeating the same pattern of the previous cycle before bottoming out. If you look at tether dominance,
Just by itself.
just by itself, yeah.
I guess I don't even have USDT.D by itself. I look at the combinations all the time.
I can send the chart
Okay.
in the Telegram group, so
Yeah.
it can be easier seen. See, yeah.
Yeah, this is starting to top out, but this is why I now like looking at the dominances combined, like USDC and USDT, because they're shifting the dominance between the two, and then this one I think tells a little bit more of a honest.
Look at the Crypto Simba chart. I posted the chart over there, and you can see the exact same pattern is playing out.
Yeah.
Then I took the candle pattern from previous cycle, and we are expecting a final rally on tether dominance, which will be equivalent where BTC went to 17K in 2022.
Okay, let's pull that up. So you're saying like up here, like this range, once it goes above that?
Yeah. Yes, it will be equivalent to that highest high in 2022 where BTC was at 17K, because I can put also Bitcoin on top of that. So the green arrow is where we are right now, and you see those green markers with the higher lows and then the fib levels and how it broke out. So they are all aligning. And this is telling me that the liquidity basically is moving away from Bitcoin. And once that will have that extreme high and it swipes the highest high, then that is basically the near the bottom on BTC. And then we look at the other charts as well, the Bitcoin divided by stable dominance, then we can get a better picture.
Yeah, and that's why, like, same thing, looking at the kind of combined dominance, tether and circle, it's painting the same picture that, like, it's up in the range, but it has a little bit more. It could go all the way up to like 14, 15. It could probably even go higher.
It will go higher.
Yeah,
it will go higher because the previous cycles always it goes higher.
Yeah, so it's like 16, 17. Who knows where it goes? But that shot upwards is a great kind of signal also to add into the process. The great thing right now is like the volatilities are so clean. That's why I love volatility. That, like, you can see the vol on this, you can see the vol on all the things, but these new charts you just showed, these things are gold.
And exactly. And when you look at Bitcoin divided by gold on the monthly chart, it usually bottoms out when there is a couple of months accumulation. We did not have those couple of months accumulation, 3 to 4 months. So now we're only at month 1, basically. And I've been also following the Elliott wave and the downsloping channel. It need to be broken, otherwise we're not having a bottom if it's not broken yet.
Mm-hmm.
I can also add that to the.
Yeah, this was such a clean signal in general, right? Like, especially on the monthly. I never zoomed out to the monthly, but this is like it was losing steam like crazy. Gold was doing its thing, of course. Yeah, for it to like bounce around in the zone here, Bitcoin's crashing and gold's kind of going alongside and hanging out there for some time. Let's see what happens. But yeah, all the signals are now pointing to something major coming and some crashes happening. My main concern right now is I'm like, how long could this last? Because one thing I've learned in crypto is things could always last longer than we all expect. So, right now the oil data, all that stuff is pointing towards something major crashing around the end of the year, October, November, somewhere around that timeline. So I'm like, if they dump it in Q1 and then Q2 is a nice little run up, but it still has more of a ranging motion, and then it goes for another double bottom around the end of the year. That's something like that's not out of the question. The good thing with us is our goal is to catch the Katana. We were looking at the scenario, right? Like if you look at, let's say, the index, the combined index, what you end up having is like you have the Katana catch. Let's say this is yen panic. Then you have a rise. You have an opportunity to sell. It pulls back to the same range, has a rise, pullback, right? Those are the kind of bigger waves that happen. But normally in the history of Bitcoin, the bottoms happen something like this. The bottoms happen something like this. It's like, the crashing process happens. First bottom happens, then there's a pump, then there's a dump into the second bottom, right?
Okay.
It's like same thing back here. It's like there's a crash, and this looks. If you go to the candles, it's like, okay, there's a crash, there's a catch, there's a pump, and then there's a dump. That looks tiny.
It's a lot.
It's a lot. On that perspective, you're like, oh, how much is that? Like this is 32%.
Yeah.
There.
And the previous cycle it was 48%, I think. Yeah.
Exactly. Right.
Yeah,
So I'm like,
it's a lot.
Catching any one of those moves, even catching them a bit, this is like 43%. Right. So catching anything like that, just adding that little bit more lift to the portfolio and then exiting. So now this is a strategy that we're looking at.
There is one thing that you can use as a leading indicator for Bitcoin. It's MicroStrategy. If you pull that chart back up, and you look at the previous bull run, when it topped out until it bottoms, it's exactly the same scenario as it's playing now, and it took it about 2 years until it bottomed. If you look at the previous bull run,
this one. Okay.
Yeah, from that top till the bottom on MicroStrategy, it was 2 years.
From this top to the bottom.
From this top to the bottom, yeah. It took about 2 years. So now we're still playing out that exact same pattern. I've been monitoring it quite a lot, and it's been telling me that we still not have had that bottom yet. So it works as also a leading indicator.
Yeah, and MicroStrategy is something that they use as a way to scare people in the first place, right? So a lot of people are using strategy as a proxy to Bitcoin. Now it's below its like net asset value. So one of the fear tactics that I know they're going to use is going to be, crashing something like strategy. I don't think it goes bankrupt, but I think they'll attack strategy. Because right now it's bouncing around that kind of support zone. As soon as it goes below that, it's going to have a nice little free fall downwards. And then all the digital asset treasury companies, the size of the moves that are happening in the traditional markets, when you bring them into the crypto markets, there's going to be a nice little wipeout of everything. So I wouldn't be surprised if it actually happens quicker than 2 years, but it could be 2 years as well. At this point, we don't know anything. That's why I'm like, so the plan is Katana's coming up. Everything says Katana's coming up. Katana happens, we catch. Okay. Whatever that is, we catch it. Then the moment a Atreides turns green, we put it into autopilot mode. That's the kind of perspective we're looking at. So it's like, let's imagine, I don't know, here something like this happens, there's a sharp drop off, and then there's a kind of a ranging zone, and then a double bottom somewhere here. I don't know. I'm just drawing this out willy-nilly, right? So let's imagine something like that. There's a crash happens, something like that. I don't know what it looks like, but we catch it. It goes down. We catch it here. It goes up a bit. Atreides turns green. We turn on Atreides into autopilot. It runs. Whenever it turns around and Atreides turns red, we exit. Okay, so this is the kind of combination process that if the on-balance volume and the signals, but a framework is a framework, and the decisions need to be made ahead of time as to what decisions are going to be made. So the decision has already been made that the best thing to do is catch the crash to the best of our abilities, turn on Atreides, let it run. If it goes in waves and it just wants to do this, fine. Atreides will keep us in the markets. Even if it gets out, it'll get back in, get stuff like that. Usually what happens is there's a crash, there's a bottom, then we go, and then there's a double bottom, and then the market runs off onto some other place. So catching that little move in the middle, if Atreides exits there and there's another crash, I Katana catch it again. That's what we're looking at.
Exactly. 100%. That's the best thing we can do.
Exactly. We're gonna nail it, guys. Thank you for this data, bro. This is legendary. Now I'm gonna start watching that.
Pleasure, sir.
This has been amazing. Oh, we got another question. More, do you worry about catching a Katana and it does a 10-10 again and continues to bleed? My thing is like, do I worry about it? No, because 10-10s are not the, to do something as big as that, you need a lot of leverage in the system. You need a lot of people to break down. You need a lot of things to happen in a certain way for it to happen, right? We catch a Katana, that in and of that's a 11-11, right? 10-10 was just in crypto. We're having 10-10s in oil, and we're having 10-10s in the stock markets. So me catching the high volatility move that's a confluence of all the volatility in all the markets is the best signal that I can have. If it has another 10-10 after that, continues to bleed. Okay, like, we made a move. It goes lower. So what? Then we sit, hang out. We're not doing anything, right? But if it crashes and has a move, and I turn on Atreides, and Atreides just needs to turn green once, which it almost always does, right? Like now it's turned green. I turn on Atreides. As soon as the volume starts to turn, it gets out again, right? Even if I just break even on that, fine. Even if we take a little loss on that, doesn't matter. This is not going to be I'm not saying that everything is always going to be perfect, right? But it's like, if you look at Atreides on, you have to look at it on Bitcoin, but it also does it on that index. Like now, imagine I'd caught this Katana, right, at 60K. Imagine I fucked it up and I caught it at 63K. And I waited, and we're sitting in the markets, and waited until Atreides turned green. Then we would have got in at 68, right? Right. Thank you for telling me that. I should get a T-shirt that says "Can't see my own screen." So it's like, imagine we catch it there, 62, 63. My goal is to catch it there, but whatever, 63. We're sitting in the markets. Atreides doesn't turn green for a long time. Then it turns green. It's running up. We're at 71. Let's imagine it just turns around and it turns red again at 70. We caught it from 63 to 70, right? On this index, on Bitcoin, because that's where the signal is coming from. But on the actual index, we would have caught it here and exited somewhere here. And that gives us a nice little, what are we looking at? 13%, 14%. 14% on $11 million is a serious chunk of change. And then it crashes down again and we go catch it again. So that's why, like, if it somehow happens that there's a high volatile crash and the 10-10 happens the next day, okay, we get caught. But in actuality, these things have time in between. So some big crash happens, we catch it, the Atreides turns green, we put it into autopilot. If it turns around, wherever we get out, we get out. If we just break even and it crashes further, we're in the money. If we make a little bit of cash on top, that's a nice liquidity event, and it crashes further and we catch it again. That's why I like the combination of this whole thing. But amazing. Thank you, guys. Thank you for being here. Thank you for your time and energy. Thank you for hanging out for 3 hours. This is kind of wonderful that we have so many amazing souls that actually pay attention for this long. So I would like to close off on this thought. Oh, Paulie G's here? Wow. Oh my God. Some of my favorite people are here. Esther, thank you for coming. I want to close off on this thought, right? We got the wizard in the house, Mr. Ken. Nice seeing you here, bro. Close off on this thought. In these times, opportunity and adversity are two sides of the same coin. And we can sit here and focus on the adversity, or we can catch the opportunity that is on the flip side of the adversity. And all it requires is for us to face the abyss of the unknown head on and trust that we are not making the decisions. There's something, the decisions are already made. We are acting out the play of the decisions. And life, you know, somebody, when the question was asked, the meaning of life, meaningless, give it whatever meaning you want. The way I ascribe meaning to life is to have beliefs around how it works. And my belief is that I am simply the actor that's reading out the lines that I've been given. And I get to read them out however I want, but actually the lines are already written. So trusting that when we're looking into the abyss, it is not the abyss. It is simply the unknown lines that are ahead, and falling into it with full faith, knowing whatever happens will happen perfectly, allows us to get through this process with beauty and love and cohesion. So with that, we'll end with the song again. Thank you all for being here. I love you guys all, and hang out, listen to the song, or, you know, go enjoy your actual lives, and we'll catch you guys next time.
Trying to run away from what I was born into, but I need to look into myself to find what's true. It's always been me, it's always been you. No matter what you say, there's nothing I can do. You just need to trust me, and I'll help you be the best version of yourself. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. Get rid of the facade and the overthinking. Stop all of your worrying and trust me, I'll make you see what I want you to be. The best version of yourself. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. Oh, when the moment comes, you know, don't run from it, don't hide from it, it's meant to be. When the moment comes, you know, don't run from it, don't hide from it, it's meant to be. When the moment comes, you know, don't run from it, don't hide from it, it's meant to be. When the moment comes, you know, don't run from it, don't hide from it, it's meant to be. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. It's a long time coming, it's a long time coming, it's a long time coming, it's a long time coming. You wanna be the greatest, you wanna have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. It's a long time coming, it's a long time coming, it's a long time coming, it's a long time coming. My angel told me I'm an angel, baby. You need to trust me, you're my angel, baby. My angel told me I'm an angel, baby. You need to trust me, you're my angel, baby. My angel told me I'm an angel, baby. You need to trust me, you're my angel, baby. My angel told me I'm an angel. have it all, and you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. Get rid of the facade and the overthinking. Stop all of your worrying and trust me, I'll make you see what I want you to be. The best version of yourself. You wanna be the greatest, you wanna have it all. And you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. It's a long time coming. 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 You wanna be the greatest, you wanna have it all. And you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. It's a long time coming. 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 You wanna be the greatest, you wanna have it all. And you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. It's a long time coming. 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 You wanna be the greatest, you wanna have it all. And you say that you want it now, but you can't wait. And you say you want it all, but you need to lose it all first. It's a long time coming.
Nothing like letting an artist finish his art properly. Thank you, lovelies. Hope you have a wonderful day ahead. Much love. See you next week. Next week, it'll be at 9 o'clock. Bali time. It's going to be much later. So it's going to be a lot better time zone for everybody to show up. Except for Australia, you guys are going to be at 12 o'clock. But we love you nonetheless. Thank you for your time. Have a wonderful evening or day. Take care.